All right. Hello, everybody. Welcome back to another Market Open. It is 8:49 a.m. Tuesday, May 14th. And we have a bit of a interesting market, to say the least, as some of the equities that we have been discussing for the past couple of days are continuing to surge a bit higher in the pre-markets. Now, look, I'm going to be honest. I actually got a lot of sleep last night. I have not slept since last week, basically. I mean, I slept a couple hours a day. So yesterday was the first, even over the weekend, because we had Mother's Day. I had stuff to do on Saturday. I really didn't get a lot of sleep. So last night I slept. Like I went to bed by like 11:30, I think. So relatively early for me. And I slept. And I woke up honestly like 20 minutes ago. I did not wake up an hour before I usually wake up and all that stuff. I woke up to like 20 minutes ago. And so I checked my phone like, not that early before coming online. And I look at my phone and I see that GameStop stock is up 120%, 119.9% right there. I did not expect that as soon as I woke up. Honestly, I really did not expect that. I woke up and I was like, all right, it's probably going to be up. Did not expect in the pre-markets it would be up 119%. But that's what we got. On top of that, AMC, which did some dilution today, it seems like, is also continuing the momentum. AMC, as we look at it right now, is up 106%. I actually didn't see this today. I was looking at some other stuff because I just woke up 20 minutes. I was using the bathroom, getting ready, all that stuff. So I really didn't get a chance to see all these equities. So I'm seeing them in real time as you guys are seeing them. AMC's up 107%. It was up over 150% at one point. GameStop, wow. Good morning, everybody. Good morning, Persian Prince from Fort Lauderdale, Colorblind Collector. Benny, I'm Beneficial. Thank you all for being here. This is insanity, guys. This is insanity. Now, one article I did see, I got to read very quickly before going online, was AMC's dilution, apparently. So, all right, we'll talk about AMC. We'll talk about that. We'll talk about dilution. We'll talk about GameStop. We'll talk about what's going on. We'll see if Roaring Kitty did any more tweets and go through that. Robinhood as well. I had a thesis yesterday, and that thesis I put out on Twitter pretty much right after the morning open. And I was like, look, if GameStop keeps running, the people that are going to be buying GameStop are going to be buying it on Robinhood or AMC on Robinhood or whatever stock Roaring Kitty tries to promote. And so I think Robinhood's going to go up in downloads. Robinhood, I'm looking at it right now. I don't know if anyone saw this. Robinhood's number 10 in the iOS App Store. They were number 22 when I posted that thesis yesterday. So I posted this yesterday at what time? I posted this at 11 a.m. and it's 8:52. Robinhood's number 10. They were number 22. Pretty damn amazing. Have you had your coffee? I have not had my coffee. I'll be going to Dunkin' Donuts after the show, and we'll see if this ends up being a longer show because we got a lot to cover. But yeah, this is pretty incredible. As a result, Robinhood, I think it touched $18 in the pre-markets as well. Robinhood is not running the way GameStop and AMC are running. And I actually like that. I'm very happy Robinhood's not up 7 trillion% right now. This is going to be a slow grind for Robinhood. Their company's actually doing incredibly well in terms of the numbers. This is just another like sort of catalyst there to kind of put them over the edge, but they don't need to go up 50% in a day. I'd rather them, take their sweet time to get to what they need to, because then the crash is going to be as epic, right? If they go higher. So, and they don't deserve to crash because they are actually a good company. This is not, I don't think they're a meme stock at all. But logically, if people are using their app to buy this stuff, they're going to get more users. And that's something the street has to take into account, at least from some perspective. So we've got a lot to talk about. Palantir here at $20.90, NVIDIA at $8.98, and then we've got PPI data. Lots to discuss on the market open. Thank you, everybody, for being here today. Walt, Nicola, Alex, Can Man, Karen, I Get Paid to Wait, Gentle, Twan, Cause Why Not, Nolan, Tesla on Tier, Victor, Harvey, BJ, Phil, Kim, Fred, Dougie Fresh, what's up, RJ, Jem, Vishal, Katie, what's up, Broccoli Bob, Mula, Felicia, thank you all for being here this morning. Nick Piercy, Player One, Liam, morning, Amit. Can I get a shout out for my newborn son, born Saturday night, Sebastian Gabitas, future Palantir at 100%. Shout out to Sebastian. I love that name for some reason. Sebastian has always been an interesting name to me. Liam's newborn son. Thank you for spending your time with me here today, Liam. It means the absolute world. And congrats on a brand new son. We gotta get him into the ontological world that is Palantir. But I love it. Thank you so much. I actually got some Palantir swag. One of the event promoters, they sent me this hat last week. So I got this hat and I have another hat that's like black. So got a little bit of Pouncer swag. They did say the merch store is being brought up. They had it back in 2021, but they're restarting it. And so we're all going to be able to like buy cool Pouncer stuff in a few weeks. Sanjay, Muna, Nicola, Tom, Dairo, thank you all for being here today as well. All right. Let's start with PPI. Let's first start with PPI, and then we'll get into all the meme stock craze that's happening. So PPI actually came in a bit worse than expected from what I'm looking at. It's not as good. Oh, also, our boy Dave Portnoy bought some GameStop. We'll talk about that in a second as well. So PPI came in above consensus for April at 0.5% month over month, but this is somewhat driven by a big downward revision in March from 0.2 to 0.1. Blue is the first release. Yellow is the latest data release. Okay, so PPI came in stronger. However, it looks like it has been revised, which is the sort of main reason for why it came in higher. Final demand services rose by 0.6%. There's a 2 to 3 month lag between PPI and CPI, so this reading suggests that reacceleration of inflation is not yet behind us. All right, so tomorrow CPI might not be the best if PPI came in higher. So the market expected 0.2. We came in at 0.5. Where is the S&P? Is the S&P down on this? Let's see. Is the S&P down? The S&P is down 2 cents. The S&P doesn't care. Wow, the market does not care. U.S. core PPI 2.4, forecast 2.3. Again, a little bit higher than expected, but market seems to not care. Month over month 0.5. Year over year actual 2.2. Forecast was 2.2. Yeah, CPI. I mean, PPI is a little hotter than expected, but it's not enough, I guess, for the market to be upset. This number right here is a big miss, 0.5 versus 0.2. But if the reason it's 0.5 is because of a revision in March and April, which means the forecast needs to be revised as well, right? Because in March and April it was higher than expected, then it's not that much of a delta between the new high and the lower low. It's actually a new high and a lower high. Then PPI shouldn't be. Then 0.5 shouldn't be that big of a surprise, actually, to be honest. Let's see what Gary Black said. April PPI came in hotter than expected. In theory, this could pressure duration names today, but with meme stock surging again, maybe not. Well, here's the other thing that this is a good point. Even though PPI is hotter than expected, the question is if the meme stock mania is going to create a animal spirit in the broader equity markets and people are going to want to buy companies, does PPI at this stage really matter? And quite frankly, how hilarious would it be is if CPI and PPI are coming down, but they need a few months. And in the meantime, the way to subsidize the transition period we need to get CPI to back to deaccelerating levels is a meme stock mania where the market is irrational and stocks are going up like crazy. It has nothing to do with inflation, literally has everything to do with a guy that's tweeting. And as soon as that's over and that's all done, like in 2 or 3 months, maybe it lasts longer, but let's say on average it'll last 2 or 3 months, then CPI comes in lower, and then the broader market can get back to taking off. So in the meantime, you've got meme stocks doing whatever they're doing, but until meme stocks are done, or until CPI is lower, those meme stocks will be higher, and then they'll come lower, and the rest of the market will rally as CPI comes in lower. That would be an incredible sequence of events over the next 5 months if meme stocks are subsidizing bad CPI, bad PPI, bad inflation data, and eventually all that inflation data comes down, and then meme stocks go back down, or meme stocks keep going higher, and the general market tends to go higher. I mean, dude, it would be crazy. It'd be absolutely crazy. Let me know in the chat if you own any of these meme stocks, GameStop, AMC, etc. Let's go to our DGen portfolio. We have the list right here. S&P is now green. Wow, dude. S&P is now green. So here's the DGen. GameStop's up 130%. And guys, this is the pre-markets. This is not even like, let me check the volume. The volume on this thing must be above 10 million for the pre-markets to be doing this. The volume is, oh my God, dude, 41 million shares have been traded in the pre-markets. That's got to be insanity, dude. Is that a record? Is that a record for pre-market shares? Well, maybe it was probably crazier back in 2021, but that's insane, dude. Adam says, admit we are literally the pick and shovel play. Yup, we'll talk more about Robinhood, but I the reason I'm not feeling too much FOMO is because honestly, I don't have a lot of money to put in GameStop. So even if I did have money, or even if I did want to get in, I don't have a lot of money. But also, I made my bets on a pick and shovel, which is not going to go as explosive as 130%, but it's a little bit more sustainable for me, and it lets me sleep well at night. Knowing that's the bet I want to go down. So I think that will benefit, even if it doesn't benefit 130% in the pre-markets. Insane. DJT, Donald Trump's up 4% in the pre-markets. AMC is up 118%. Reddit's up 7%. I want to add a couple names to this. Let's add BB, BlackBerry. Oh my God. BlackBerry's up 25%. Wow. The apes are back, folks. It is time. It is officially time. Plug Power. This one was a meme before. Wow. Plug Power's up 60%. Holy crap, dude. Holy crap. Holy crap. Oh my goodness. Plug Power. Michael Wilder, hello. Thank you for being here. Plug Power is up 60%, bro. What's another name that I'm missing? There's another. Oh, Tupperware. Wow, Tupperware's up 40%. Dude, this is insanity. This is like this feels like anarchy. Kind of feels nice, to be honest. Feels like, we're rewriting the paradigmatic sort of infrastructure of the markets. Like, this is crazy. And I'm curious, we haven't had a lot of information yet. I'm curious which hedge funds are short, because I still have no public hedge fund like a Ken Griffin type of dude has come out the 0.72 guys and said, we are publicly short XYZ company. I haven't seen anything like that. Maybe they're hiding, or maybe, eventually they're going to become public. But once that becomes public, I think that's another catalyst, because people are going to be excited that these hedge funds are potentially down. Wow. Oh, SunPower. Yeah, you guys are right. SunPower. This thing is like 60% short, right? SunPower. Oh my God, that's up 122%. Holy shit, dude. What is going on? This is insane. What's SunPower short? Let me check SunPower. SunPower short float. Oh, that's why. Guys, look at this. Holy crap. SunPower is 95% short. So there you go. All right. Whoever shorted SunPower deserves this, dude. 95% short. Are you kidding me? 42 million shares and 45 million shares. 42 million are sold short. Seriously? Like this feels like one of those things that the shorts deserve to get their asses handed to them, because that's just like insane, dude. That's almost 100%. That's almost borrowing shares that don't even exist. Wow. Is anyone in these stocks? Let me know. Michael says, why are stocks mooning? I think we are seeing a bit of a revolution. I am skeptical on how long that revolution can last and how much energy there is to propel that revolution. But there is definitely a revolution once the GameStop doors were open for all of the high short interest stocks to be able to get a ton of benefit. And my bet is that this one company, Robinhood, which is up 6% in the pre-market, it's not 150%, but 6%, not bad, is going to benefit from a shit ton of trading activity, and the market is not priced that in. And Q2 earnings, I know a lot of people were afraid, can they replicate it? It looks like these guys are going to replicate it, because, I mean, to get this much growth by doing nothing, essentially, and just like having Roaring Kitty tweet for you is incredible. A couple other things, then we'll keep talking about this. Home Depot had earnings. Home Depot right now, down 0.72%. Numbers for Home Depot, let me tell you right now, they beat on EPS by 1%. They missed on revenue by 0.7%. So nothing too bad for Home Depot. We want to make sure Home Depot numbers are good, because it's the state of the consumer, essentially. Do people keep buying, tools and nails and all this stuff? And it looks like their numbers came in line and nothing too crazy. So Street has them pretty much flat. Baba, where's Baba? Baba had earnings today. They missed on EPS by a little bit. Alibaba, wow, down 5%. Alibaba missed on EPS by 1 cent, and they beat on revenue by 1%. Yeah, that's not enough, dude, for Alibaba. I mean, I know they're super undervalued, but it seems like you need to have if you're going to have the China risk associated with you, you need a bigger beat than that, than just 1%. So Alibaba is down a little bit as well. Space. Is Space up again? Virgin Galactic? I really relate to Virgin Galactic. Wow, it's up 31%. Yeah, I relate to Virgin Galactic for a lot of reasons. I mean, the first name in Virgin Galactic is so known to me. So Virgin Galactic here up 31%, $1.37. This thing was Richard Branson's company. I think he sold out of his position. I think Chamath also dumped on retail on this one. That's up 31%. Wow. I wonder if it's algorithms now or if it's actual human beings buying these stocks, because the algorithms might be recognizing the trend. They're very sophisticated at seeing the trend and then just going to the companies that are in that trend and buying them up. So, I mean, that's basically what happened with the Bitcoin miners, right? Let's go to Bitcoin as well. Bitcoin 61. All right. Fucking dude. Fucking like if Bitcoin was at 70,000 right now, everything would be on fire. But this stupid Bitcoin is staying stuck here at 61. Clean Spark's down 2%. Coinbase, I saw this yesterday. I could not believe this. Coinbase is below 200. Coinbase is below 200, bro. Insane. So I mean, like Bitcoin really needs to get its act together, or else things are going to get a little tough for the crypto markets. Let's add another one to this. You guys are saying, what's the other one? Holo. Yeah, this thing is short like crazy. Oh my God, this one's up 77%. This is crazy, bro. This is crazy. This is legit insanity. Like, this is just wow. This is wow. Holo's up 77%. Enphase, where's Enphase right now? Enphase is up 2.8%. What was the other one you guys mentioned? Rivian, I don't think has a huge short float. I'll check Rivian in a second. On had earnings today, right? They're a sneaker company. They're up 16%. Okay, that's not a meme stock. They had actual earnings. Their earnings, let me check right now. On. Did they have earnings yet? No, they did. They definitely had earnings. Oh yeah, they had earnings. So on the reason they're up is because they beat on EPS by 137%, beat on revenue by 7%. So on is up 15%. There you go. Yeah, that's less meme-ish. That's more, they have some like $250 sneakers that I don't know why people buy, but they buy it. I will not be buying $250 sneakers, but it's like some really nice sneakers that people buy. So on is up as well. But the DGen portfolio really is what's going on this morning. Okay, so AMC did some dilution. Let me pull this up as well. So let's read this because it looks like AMC is taking advantage of this and shareholders don't really care. Oh, Spirit. Let me add Spirit to the list. Spirit's up 2%, so it's not as degen. So Spirit's not too bad. And then Beyond Meat, they're up 20%, right? Beyond's up 17%. Yeah, of course. Why not? Okay. So AMC completes $250 million stock sale during meme rally. Shares up 100% in pre-market. AMC raised about $250 million of new equity capital, completing the sale Monday during the revived meme stock rally. They sold 72 million shares at the market at an average of 345. AMC shares wow. So they dumped 70. I think they did a reverse split already. I think they did 2 reverse splits, if I'm not wrong. They definitely did a lot of funny stuff with the stock. They sold another 73 million shares on the market. And the stock is still up 100%. Wow. It's at $11, dude, in the pre-market. Holy shit. Oh my God. So now I'm wondering if GameStop is going to do the same thing, right? It might be obvious for GameStop to do a offering, but when I checked, GameStop apparently is profitable, guys. That's one thing I didn't know. Let me pull them up right now. GameStop is their net income. Okay, this thing doesn't have an update. They lost $313 million last year, but I think last quarter they were profitable, if I'm not wrong. They made revenues of about $5.2 billion in 2023. So I don't know if they need to do a raise. I mean, it probably would be beneficial at this price. I mean, they're up 200% in a couple days, but not sure if they need to. Let's see if Roaring Kitty tweeted at all. Did he tweet? He's about to hit 1 million followers. Wow. Oh no, he did. Okay, so he tweeted another movie clip. And he's almost at 1 million followers. Roaring Kitty is at 995,000. He's going to hit 1 million probably in 20, 30 minutes, which means he went from 400,000 to 995,000 in 48 hours. All this from a tweet. Yes, dude. I'm surprised. You know what I'm really surprised about, guys? Why hasn't Elon engaged in the fun? Like why hasn't Elon tweeted at Roaring Kitty, or you would imagine, because this is a lot of attention for Twitter. This is great for Twitter. All the action is happening on Twitter. It's not happening on Threads or Instagram. It's happening on Twitter. So I would imagine that what's his name? Elon says, yo, what's up, Roaring Kitty, or something like that. But he hasn't engaged in this. I think if he engages, or if he says power to the players, this thing is going to get even crazier. So apparently SEC chair Jay Clayton is having some issues with this GameStop run. Let's get an update on that as well.
GameStop shares are soaring once again this morning, adding more than 170% just since yesterday morning. Another meme stock soaring along with GameStop is AMC. AMC is up 187% for the week to date. And of course, it's only Tuesday. Joining us right now with more on this is Jay Clayton. He is former SEC chair and a CNBC contributor. And Jay, we've been kicking this around this morning. I got a whole lot of different takes on this. First of all, the short sellers didn't learn their lesson last time around. Second of all, retail investors are back with a vengeance, but you can't really call this investing either. These are massive swings. As a former SEC chair, what do you think when you look at all of this?
Well, it bothers me. It bothers me on many levels. I think your last guest got it right. It's a lot closer. And, you know, is a tweet really investment advice? I think we've learned over the last 5, 6, 7 years that a tweet is really never investment advice.
That never even mentions the companies involved. I mean, that's what's so phenomenal to see massive moves like this when really it was just the implication that he may be sitting up and taking notice. That's the tweet we're talking about.
Yeah, and we can debate whether that's, you know, let's put it this way, whether it's legal or illegal or it's manipulation or not. But I have a question for Keith Gill, which is, why not tell people why you did it? Why not come?
Wait, but hold on there. Hold on. Did he just say we can debate if tweeting a waking up meme or like a getting into the zone meme from GameStop is illegal or like, did he really just say that? Dude, you cannot say him putting a meme on Twitter is illegal. The amount of times that Bill Ackman has went on CNBC or any of these suits and they said one thing and did another behind the scenes, knowing that the stocks are dropping and they're buying up shares and they're going to sell them again when they pump. Like, the amount of times that has happened, there's no way you can tell me him tweeting a picture is enough to cause illegality. Let's hear him say that again, because that's kind of insane. Now, granted, the SEC, if they want to mess with you, they'll mess with you, right? And they'll bring all their fancy lawyers. That's what they're doing with Robinhood right now. But still, I think that's hard to say that's illegal.
And we can debate whether that's, you know, let's put it this way, whether it's legal or illegal or it's manipulation or not. But I have a question for Keith Gill, which is, why not tell people why you did it? Why not come on the show and say, are you saying that GameStop is now a good investment opportunity? You know, we don't know. What we know is that triggered what I would say is euphoric and speculative buying among the retail community, which is never a great thing.
So this was a really...
Yeah, but again, you can't prove that, right? Like, yes, obviously, did that tweet create a ton of momentum? Yes, but that tweet was not by GameStop. That tweet was a meme. I mean, if we start policing people's memes on Twitter as like investment advice, I don't know, dude. That's a very dangerous path to go down, and I hope the SEC doesn't actually try to nail him for that.
Interesting proposition put out by Matt Levine from Bloomberg yesterday. Just what about the idea if Keith Gill, Roaring Kitty, who tweeted this, were to have gone on and bought options ahead of time, tweeted this, and then made a lot of money based on everybody going into this and the price going up, is that illegal? It's not insider trading.
It's not insider trading. That's clear. Unless he's trading on his own information. That's why it's not insider trading. But is this something that we should be tolerating in our markets? You know, whether it's legal or illegal, I don't think so.
Get the fuck out of here, dude. First of all, okay, so first, it's good he said it's not illegal, so that's not an insider trading perspective. That's fine. That's great. That makes sense. Number two, the idea of tolerating in the markets, are you kidding me? Like, you've got to be kidding me, dude. Warren Buffett literally got permission from the SEC to not disclose a stock. He still hasn't disclosed it, by the way. I think it's SiriusXM, but we're not sure. For the past 8 months, since July 2023, almost coming on a year, the SEC was like, oh yeah, we're not going to let you have to disclose this, even though every other human being on the planet has to disclose in their 13 Gs what they're accumulating, because we don't want, anything bad to happen, which means Buffett literally has 8 months to build up a sizable position before having to expose it, getting in prices that are low before people have to buy that's higher. If that's legal, and this guy can't buy options before tweeting a meme, and then people interpret the meme however the hell they want and make some money off of it, that's insane. That is absolutely insane. And this is why people buy GameStop, even if they don't give a shit about the valuation. It's people like him and making these arguments that creates the level of animosity and anger that people have with the financial system.
And that's why I say, why doesn't he,
But what does that mean not to tolerate? So the idea, I would think, is you look at this more in the context of market manipulation, right? And the question is, are you allowed to manipulate the market? People, by the way, publish things all the time and they say, hey, I like this stock, and they, hope that other folks follow them. Is that market manipulation?
Generally not.
Maybe not. So what is the distinction in your mind as somebody who ran this department and who's looking at and cares about the integrity of these markets?
Well, that's why I'm saying, okay, we can discuss what are exactly the facts and circumstances around the publication of this tweet and the like. But in the meantime, if you care about the markets and you care about investing, come on this program.
Right.
Tell people why you did this.
What if you don't want to be on dude, what what the fuck is this guy saying? Is he pumping like CNBC or something? Are they working with the SEC? Why is he so obsessed with going on Squawk in the Box? I mean, look, I love the show as much as the other guy. I saw Andrew Ross Sorkin in DC the other day and he was like a celebrity. I was like, oh my God, I want to say hi to him, but I didn't end up saying hi. But like, look, I love the show also. The show's awesome, but like, is his argument people have to come on the show to make an argument about the stock they want to buy? Are we doing this in America? You should be able to buy whatever fucking stock you want. And as long as it's not insider trading, if people want to follow you, that's people's prerogatives. If you're not pumping and dumping, there is nothing illegal about that. And if it's not insider trading, there is nothing illegal. Why does he have to go on CNBC to encourage people to buy or sell a stock? He's a private citizen. He can live in his basement, be anonymous, do whatever the hell he wants. Because in America, we don't investigate you just for putting out a tweet. This is insane. Look at this. Roaring Kitty should only have free speech if it's on CNBC. What the that's insanity, dude. I cannot believe he's actually arguing that you have to be on CNBC to make an investment decision.
Okay, we can discuss what are exactly the facts and circumstances around the publication of this tweet and the like. But in the meantime, if you care about the markets and you care about investing, come on this program. Right. Tell people why you did this.
From your lips. God bless you. We hope he does.
Okay. But again, is there anything illegal about this or not? You may not like the way it looks.
There is nothing illegal about saying I like a stock. There are things illegal about saying, I like a stock and taking activity in the marketplace that's designed to, drive behavior, indicate that prices are rising, and those types of things are illegal.
Pump and dumps aren't illegal necessarily.
Pumps and dumps, but they can be and they cannot be. It depends on how you're doing them.
These guys are out of touch, dude. These guys are absolutely out of touch. That's incredible. That is so incredible, dude. That just goes to show, I think Keith Gill is even more powerful than I thought. I mean, even last night, I was thinking is the SEC going to come after him? How are they thinking about this? But this guy just admitted, yeah, there's not much we can do to this guy if he's just tweeting. Now, if he's tweeting on insider information, they can go after him. Doesn't look like he has insider information. Just looks like he's, looking at the short floats and they're absurdly high again. They're not as high as they were before, but he's recognizing an opportunity. And he's not telling people to buy. He's not telling people to sell. He is tweeting out movie clips. You cannot like Bill Ackman that goes on CNBC and literally says, hey, we are selling our stocks right before March 13th when the world shuts down during the pandemic. I don't understand how that's less manipulative than this guy tweeting out movie clips. No way. There's just no way. GameStop right here up 134% in the pre-market. So I think that interview is going to inspire the apes to be even more aggressive. At some point, people are going to buy this damn stock because they don't care anymore and they want to stick it to these guys. Now, granted, it's not the same environment that it was in 2021, but still, things like that will get people upset and will get people to keep buying the stock. There you go. Yeah, Benny says he wants him to go on CNBC and tell everyone his secrets. That's so weird, dude. I'm just so perplexed. Why is he shilling CNBC? Come on the show. Tell everyone, why? Why does he have to be on the show? Why can't he just tweet about it? Why can't he just stay in private? Why does he have to be so public? What is Jay Clayton investing in? What is Jerome Powell investing? What is in his 401k or something? Do we need to know everyone's portfolio? No, we don't need to. So why is he obsessed with getting this guy to admit it? It's very weird. And he wouldn't ask a hedge fund manager to do. He wouldn't ask Warren Buffett for what his secret stock is. It's probably SiriusXM, by the way. There's no way it's not SiriusXM. Siri right now, this thing's up 1.59%. He increased his position by 351% on Sirius, so I would think it's Sirius. But Robinhood 1780 in the pre-markets right now. S&P 500 521. But yeah, I think those guys are going to continue to inspire people to buy up some of these stocks. All right, so Hollow's up 71%, Virgin Galactic's up 30%, Beyond Meat 22%, Spirit Airlines up 4%, Tupperware up 31%, Plug Power. This was one of the first stocks I bought actually back in 2019. This thing ran up to like $122. Yeah, look at their max. They did a bunch of reverse splits, so basically it was worth $1,500. But I bought this thing really cheap, and I ended up $75. Sorry, it ran up to 75, but I never ended up selling. I mean, I sold it at like $4, so I didn't make that much money on it. But this one's back. BlackBerry up 24%. Reddit's up 8%. Reddit's business should definitely get momentum because of this. I think it actually makes sense for Reddit to be up on this news. Same thing. Reddit and Robinhood to me are not sort of memey if they get 10%, 20% gains on this, because literally their business, their user engagement, their activity, their transaction revenues, their advertising revenues, all that is going to go up. So it's like a literal catalyst that makes sense for the market to price in. The other is obviously is more, just whatever. But Robinhood and Reddit, I think, should benefit from that. DJT up 3.49%. AMC up 127%. Wow, AMC's up another 20%. It was up 100%. Now it's up 120. And then we got GameStop at 123% as well. Let's add Robinhood to this. Again, Robinhood's not really degen to me, but it is the home for all of this casino to be playing out. Robinhood here, 1773 in the pre-markets as well. Plug won a $1.6 billion grant from the government. Okay, that's good news. That's important on a day like this. Mullen's up. Is Mullen up today? Should we add them to the list? Mullen. Wow, Mullen's up 30%. Holy crap, dude. This is like when you let the prisoners let loose. When you open the prison gates and everyone just goes out. It's like these stocks have been stuck. A majority of these stocks have been stuck inside of the prisons of the stock market for 2 years now, 3 years, and they're let loose and they are going out. They don't care. They do not care anymore. FFIE. Okay, that's another one. FFIE. Faraday Future? No way, dude. No way Faraday Future is up 63%. Dude, it's worth 0.09 cents. It went from 6 cents to 9 cents, dude. Oh my goodness. Holy shit. These are the equivalent of shit coins. Literally. These are shit coins in the public markets. Oh my God, dude. Are we serious right now? Faraday Future. This is an EV company. I think Palantir actually invested in these guys, and then they like in the SPACs, and they got rid of them like a year ago. There's no way this thing went from 6 cents up to 9 cents up. Goodness gracious, dude. I mean, honestly, when something's 9 cents, people will buy a ton of it. And that's a lottery ticket right there. It's 9 cents. You put in $10, get a ton of shares. People get excited about that. That's insane. That's insane. Huma is up 90% in a month. What the hell is Huma? How do you guys know all these tickers, dude? What is going on? Huma was at $1.96. Now it's at $5.84. Yeah, it's more than doubled. Well, no, it was $1.96 in 2022. Well, no, it was $2 at the end of 2023. Now it's $5.48. That's up 5.29% in the pre-markets. It was up 16% yesterday. So Alibaba sucks this morning. Home Depot down about 2%. The Mag 7, the PPI data was not the best. Let me look at the Mag 7. Google's down a little bit. Amazon's down a little bit. Nvidia is down below 900. Tesla 174. Tesla's doing well. Microsoft down. Meta down, and then Apple is slightly up. So the Mag 7 are basically unchanged. The rest of the broader stock market, nothing that crazy. SaaS companies, yeah, all relatively flat or slightly green. Salesforce, Oracle, Snowflake, etc. Palantir at 2092. And then the meme stocks are what's rallying. GameStop 126. We got 7 minutes until the market opens. Where's SoFi, dude? Like the SoFi. Okay, SoFi's up 1.4%. I really wish SoFi if all these stocks in the degen portfolio are just heavy shorted, SoFi's at 19%, dude. SoFi could get thrown in there. But the question is if the market or if the apes are willing to allow SoFi into the club. I really wish. You know what? SoFi feels like that kid that doesn't get picked on the basketball team on the playground. Like that's what SoFi feels like, dude. And it's like it needs to get picked. It needs to get picked up because if we could get even 10% of the momentum on SoFi, even 5%, I would be so happy. But SoFi is stuck right now. SoFi stock. It's crazy too, because SoFi is a bigger cult than all these companies outside of GameStop and AMC. SoFi is a bigger cult than Beyond Meat or Hollow or Virgin Galactic or SunPower. Like SoFi cult is huge, but the damn stock is just like there's just not enough buyers buying in. SoFi's trending on Wall Street Bets. Okay, hopefully that helps. Hopefully that helps. Oh, DNA. What about DNA? Ginkgo. This thing went to 70 cents. Is this thing getting up a little bit? This thing's still down. Yeah, this one, Kathy's down a lot on this one. This one's going to take some time, I think. I was listening to a little bit of the earnings call. I think they kind of pivoted their business. They used to say we're going to collect downstream revenue from drugs that are built on our platform. They're kind of like an app store for synthetic biology drugs. Now they're saying they're going to share data as a service, and they're kind of pivoting more towards AI and offering data to their clients. It's a really horrendous pivot, in my opinion. It's not the vision I think Kathy invested in. So that one might be stuck for a while. Now, granted, if it gets into the meme stock craze, that would be exciting for it. But I don't think people care about DNA and the meme stock craze. These are the stocks people care about. AMC, oh, wow. AMC 142%, dude. It was at 120 like 4 minutes ago. 140%. GameStop 123%. Plug Power 73%. This is insanity. This is insanity. Wow. What about Lucid? Lucid should be up a little bit, right? Lucid's up 7%. They had an okay earnings, not a horrible. I mean, they had nowhere else to go but up, but they did have an earnings. By the way, guys, I had a crazy dream last night. I think it's probably because I took some melatonin, I haven't took melatonin in like 3 weeks, but I had a dream when I was in high school. I used to do debate tournaments, and you would get to like quarterfinals, semifinals, etc. And in those debate tournaments, you would have 3 judges, and you would have to win at least 2 out of 3 judges, right? 2-1 decision or 3-0 decision to be able to get to the next round. I have not debated in like 10 years, and I randomly show up at a tournament, and they're like, "Hey, Amit, you're debating." And I debate, and then in the quarterfinal round, I win on a 3-0 decision. I don't know what the topic is, but I won with my teammates. And then in the semifinal round, we lost on a 2-1 decision. And I don't know what the topic was. I don't know what the debate was. But all I know is I was in my dream. I was just in the debate tournament again, like I was 10 years ago. And I wonder, were we debating about stocks? Because a part of me thinks that the dream was we were debating about stocks. And if we were, it would have been the craziest dream ever. Back with just thinking about what's going on in the markets right now, and also thinking what's happening here. Lucid is 35% short interest. Oh boy, that's incredible. Sachin, what's up? Sachin, thank you for being here. Tiger alumni, thank you for the $2 super chat. Best of your knowledge, what do you think AMC is going? I mean, if I had to guess, it's going up, dude. Like the way this whole thing ends is by these stocks coming down, right, crashing down. But it's been 2 days. It's not even been 2 days. It's been a day and a half. So like the momentum is there for it to run. The question becomes, are there enough people out there in the world ready to ape into this stuff? And again, Robinhood is a proxy. Robinhood went to number 10 on the App Store. That means they went from number 22 to number 10. They probably got close to 60 to 70,000 downloads last night. All of those people set up an account, probably put a couple grand in their account, maybe a couple $100, and they're buying one of 2 stocks, AMC or GameStop. That's it. So when you have all this new capital flowing into these equities, I don't see how this ends anytime soon, unless a big whale just like massively unloads their position, which, yeah, it's possible. But again, the way, I mean, that's like, if there's a real movement around this, those people aren't going to be selling either, because they know what happened last time. I mean, last time GameStop went to $483, dude. It's at $30 right now. Or sorry, $65. So, I mean, I guess we'll have to see. We'll have to really, there's a little bit of red candle right now, selling off a little bit. It was up 130. Now it's up 112. So we'll have to see. Someone will have to really sell, or there's going to have to be a lack of buyers to get this thing to keep going. Wow. A little bit bigger of a red candle forming. Oops. I think someone's selling. Wow. Look at that. It went from 130 to 108. You guys see this red candle that's forming right here? It means it just went down 20%. But still it's up 100%, right? So someone just unloaded a crap ton of GameStop, and it's hovering at 107 because someone's buying those shares at 62. I think the PE for GameStop now is like 3,000 or something. Like it was like a 1,700 yesterday. It's pretty insane. But again, that dream I had last night and winning on that 2-1 decision or winning on that 3-0 decision, then losing, it was very interesting, that dream, because I feel like I was thinking about, I was debating the stock market, and we were debating against other people. And it was just like every part of like my mindset now is dealing with these meme stocks, whether it's my dreams or what the equities that we're looking at. It's like it's like all encompassing. And at one point, I remember in 2021, even though I wasn't that into the stock market as I am now, the media couldn't stop covering this. I mean, this was 24/7 news. And I think right now CNBC is kind of like, we'll see if there's any momentum here before we really cover it. Like GameStop and AMC were 24/7 CNBC. They had nothing else to talk about besides this. And for good reason. I mean, this is the hottest story, right? So it's going to be interesting to see how that plays out this time, and if the media coverage continues to be as aggressive as it is as well. But we're going to have to see kind of how it plays out. And I think CNBC is waiting for them to really prove that this is a lot of momentum before they cover them more in depth. All right, folks, we've got 30 seconds until the market opens. This is going to be really exciting to see how this plays out. Thank you all for being here. Volume on GameStop, 176 million. Absolutely insane. Another day in the equity markets. It's fun to cover this. Thank you all for being with me here today. I really appreciate it from the bottom of my heart. Hopefully you guys get a lot of good information and some entertainment out of this. 9:30 a.m. Tuesday, May 14th. The stock market is now open. Wake your ass up. Here we go. GameStop is up 98%. So nice red candle right there. It's probably getting halted. It's got to get halted. It's got to get halted. There's no way it doesn't get halted. It looks like it's going to get halted. Looks like it's going to get... Yep, it looks like it got halted. Look at that. Barely moving. Halted. There you go. Halt within the first minute. Not even the first minute. The first 30 seconds, it's halted. Okay, Tupperware is up 23%. Plug Power up 66%. AMC, 116%. Wow. Robinhood up 5%. Beyond Meat up 17%. Mullen up 17%. Faraday Future up 63%. Spirit Airlines up 4.7%. SunPower up 80%. Tupperware 27%. BlackBerry up 18%. Reddit up 6.675%. DJT up 3.4%. GameStop is halted. AMC up 116%. Interestingly enough, AMC is not halted. Volume on AMC right now is 147 million. Volume on GameStop is 48 million. But that one got halted, so it seems like that one's a bit more volatile. Now, granted, GameStop stock is like, it's literally more dollars, right? At $68 versus $10 for AMC. So I guess there's more money, liquidity concerns, trying to make sure the shares are available to be able to buy. But that one is halted. And then AMC right here at $11. AMC, wow, continuing to move. AMC continuing to move. Let's go to Palantir. Let's see some of the other equities we got. So Palantir, we've got Palantir. Oh, wow. Look at that. Palantir up 2%. Now, here's one thing I'll say about Palantir. I really do not want Palantir to get into the meme stock kind of era, to be honest. Like, honestly, as much as I would love Palantir to be up 40% today, I do not want them to get associated with meme stocks. I think any long-term investor does not want that for Palantir. I know the gains would be super juicy, but it's going to come crashing and burning, and it's not going to be fun. And so, yeah, I really hope that doesn't happen. I don't think that's the right way to build the company, but we'll see what happens. But it's up 2% today. SoFi, wow, SoFi's up 4%. Maybe SoFi kind of gets into the mix. Maybe SoFi gets kind of into the mix with some of these meme stocks, up $7.35 right now. On SoFi. Let's see, dude. SoFi probably deserves a little bit more momentum here. We'll see if that can happen for SoFi. But SoFi right here, 734. Sirius XM up 3%. Lucid up. Wow, Lucid. Okay, Lucid's getting into the meme craze. Lucid should not be up 11%. There's no way. Lucid's getting into the meme craze. Lucid's up 11%. Palantir again up almost 2%. It kind of feels like market might be associating Palantir with the meme stocks. They were associated last time. Remember, Palantir was at $45. I really hope that doesn't happen. We don't need Palantir to go to $40. It's not going to make a lot of sense. But let's see. Let's see how the market interprets it. Palantir right here at $21.30. Lemonade is up. Oh, Lemonade as well. Lemonade, I think. Lemonade. Wow. Lemonade. Well, it's up 4%. Nothing too crazy. But Lemonade has been hit for a long time. Enphase at 120, up 8%. Interesting. I think Enphase could be a candidate for a meme stock, quite frankly. Enphase was a big name back in 2021 as well. I mean, Meet Kevin was talking about it every single day, so it got a lot of exposure. 8% is pretty wild, especially I don't think Enphase deserves this pump because rate cuts are not happening yet, and Enphase needs rate cuts. Now, has it bottomed? Probably. Their last earnings showed that guidance is probably going to get better. But does it deserve to be up 10%? I don't know. We'll have to see. Robinhood, 1828. Robinhood's up almost 9%. There you go. So Robinhood. And again, Robinhood, in my opinion, deserves this. I really think they deserve it because their numbers are just going to show more growth. Same thing with Reddit. So for Robinhood, I think it makes sense. But we'll see if it can hold on to that. GameStop is halted. AMC is halted. GameStop and AMC are halted. GameStop and AMC are halted. Wow. GameStop's been halted for like almost 4 minutes. I guess we got probably a couple minutes left. Who's in one of these stocks? Let me know in the chat. I think I asked this question before, but I forgot to read some of the comments because we were going through a bunch of stories. Let me know in the chat, which one are you in? Put yes or no, and then which one. Which one are you actually in? GameStop, AMC, or any of these degens? All right, we got Felipe, who's in GameStop. We got Tony, who's in. Andreas is in. Tayeb is in. Space Max is in Space. Okay, that makes sense because your name is Space. Brian's in. Arthur's in. Tomas is in. All right, so a lot of you guys are in. You guys are some fucking apes, dude. You guys are. Oh my gosh. Honestly, if it's money you can afford to lose, it's fun. Okay, I'll be the first guy to say that we can all have some fun. It's if it's money you can afford to lose, it's fun. Robin at 1825. But if it's like real money you can't afford to lose, like if it's like 50% of your portfolio and you can't lose that 50%, I don't know. I would take some profits if you're up. But if you can lose it, it's like, it's a lotto ticket at that point. It's just having fun. So, and if anything, you're making money. So, my $1 of GameStop should be up right now. What's my $1 of GameStop? I bought GameStop yesterday. I am up 70% on that $1. Oh my gosh. I'm up 70 cents, boys. I'm talking about whales in the chat. I'm up 70%. That's what I'm talking about. Palantir up 2% right now. Palantir also, dude, Palantir doesn't deserve to be at $20. Those earnings were phenomenal. So Palantir deserves some momentum that we're seeing here. Michael Wilder says, make me daddy now. Oh boy, we'll see. You will see. Dude, if you got into GameStop early or AMC early and you ride this thing out, this thing might make some life-changing money, quite frankly. GameStop is not halted anymore. It's now got halted again. Wow. So it went from 63 to 57. Now it's halted again. Wow. Wow. This is incredible. Diane's up 98,000 in Palantir. That's incredible. That's amazing. Why is GameStop up again? Again, the reason GameStop is up is because a lot of people across the world, for those that are new to the story, Roaring Kitty, the guy who started this entire meme stock rally back in 2021, he tweeted, and he's continuing to tweet. And those tweets are a dog whistle to all of the people that his YouTube channel just gained like 30,000 subscribers as well, and to buy the stock. And here he is. As you can see, he hasn't live streamed since 3 years ago, but he used to be live every day streaming. That's what he looks like. And he's back. Now, one conspiracy theory I saw last night, guys, and I actually think a little bit of weight deserves to be given to that conspiracy theory. Lucid up 18% is insane. Let me show you guys this because I saved this tweet. Let me know what you guys think. I think it's probably not true, but still, it got me thinking for a second. Okay, never mind. I didn't save the tweet. But the point is, there was a screenshot shown of the guy messaging Roaring Kitty's Twitter account. This could have been photoshopped, but I'm just putting it out there. And he said, "Hey, how much do you want to sell the account for?" And Roaring Kitty responded, "If you have a good offer, I'll sell." Now, again, this could totally be photoshopped, but imagine Roaring Kitty is not even running his own account. Imagine he sold the account for like a couple $1 million, and some random dude now has access to 1 million followers. If that's the case, and that random dude doesn't give a shit about GameStop, but he cares a lot about AMC, and he's tweeting this AMC, he's basically tweeting movie clips, which is a signal for buy AMC. Who knows, dude? And if he stays anonymous forever, we never need to know if Roaring Kitty actually sold his account. It's a thing to think about. GameStop still halted, AMC up 107%. It's something to think about. Because if that's the case, Robinhood now 1835. If that's the case, then we might be having a whole different game that's being played here that no one knows about when it comes to the account with Roaring Kitty. SoFi 743. Okay, so we got some momentum on SoFi. My options on SoFi are just about break even right now. So SoFi is getting up there. Let's see if SoFi can maintain this momentum. I think SoFi is going up primarily because of the meme stock stuff, guys. I doubt SoFi is going up because of anything else. So this might be an opportunity to kind of take advantage of this. But the question is, how high does it get? I mean, if SoFi surges because of meme stocks versus their earnings, that would be insane. That would be insane. Palantir 21.38. GameStop still halted. AMC up now 96% on the day. Guilty Gunner, thank you for the $2 super chat. AMC, GME, Clove, that's the biggest names that are in. Clove, we haven't looked at Clover. This was a Chamath one, right? Clover. Wow, that's up 21%. Didn't expect that one. I didn't expect that one. Clover's up 21%. I think we have, wow, Clover's up 21%. Incredible. Faraday futures up 80%, guys. It's 11 cents. It was 6 cents. Dude, that's insane. Reddit's up 5%. DJT's up 5%. GameStop still halted. We're waiting for GameStop to get unhalted. Once that one gets unhalted, we got to see, does that thing have momentum? Does it run? Can that thing keep running, dude? Can that thing keep running? Can I buy it on Robinhood? Oh, I don't think it's halted on Robinhood. Is it not halted on Robinhood? Hold on. I just sent an order for $1. Order received. Let's see if it. Wow. Oh no. Okay. It looks like it's still halted. Yeah. It's gonna wait to fill because it doesn't have the halted notice there. Okay. I was about to say if Robinhood's letting me buy this shit and the rest of the world isn't, that's a plot twist. That's incredible. And that's the thing I noticed yesterday as well. A lot of people were complaining about E-Trade. Let me know in the chat if your brokerage gave you any issues. But people were complaining a lot about legacy brokerages. And there was zero complaints about Robinhood. The only complaints was the 24-hour market. That's because people don't understand how the 24-hour market works. But outside of that, during the day, we had no issues. We had no issues. And I was really happy about that because at this point, if we have issues, I think people might actually find me and kill me. At this point, if Robinhood, so I am, this is what I got to show you guys. This is my meme. This is me. This is me all day making sure that Robinhood doesn't fuck up. Like, I'm not a company representative, but at this point, the amount of times I've tweeted about these guys, this is me all day making sure Robinhood doesn't fuck up. I'm just like, guys, please do not mess up. AWS CEO just stepped down. Interesting. Is that big news? Let's see where Amazon stock is right now. Is that big news? AWS CEO, Amazon's down 1% on this. It's not that big. If Andy Jassy stepped down, that would be a big deal. AWS CEO. If the numbers for AWS were bad, okay, but they're at 10% operating income margins and they're at 17% year-over-year growth. So that guy's probably just, bored and they're getting a new CEO. Now, if Andy Jassy steps down, that's a big deal. All right, GameStop's back. They fell another 20%. It's up 69% now. Now we got to see. Can we get some momentum on GameStop? Up 74%. It was at 67 in the pre-markets. It's at 51. So we did have a nice little decline here. Red candle still forming. A lot of people are selling. They're taking their stocks. They're taking their money. It got halted again. I think it got halted again. Dude, how did it get halted again? That's insane. Wow, halted again. What is going on? How many orders are coming in? You know what happened? It fell like another 5%, and the ton of probably limit orders started to get filled, and the broker just couldn't handle that because a lot of people probably had limits at like $50 or $49, or they were just probably putting in new orders, and the broker just can't handle that. Wow. Did my order get filled? Did I get another $1 of GameStop? I got another $1 of GameStop, guys. Officially got another $1. My average is now $41 on GameStop. So that filled. Look, I can't complain. Robinhood filled the order. They filled it in pretty quickly. I got it filled. So, I mean, brokerage it's been doing pretty okay. Not too bad. Here's Dave Portnoy on why he's getting into GameStop. He's up a lot right now. Dave has a $30 average on GameStop and a $5 average on AMC. So he's up a lot right now.
All right, DDTG alert, breaking news. I can't fucking miss a fucking 50-year storm. You want to fucking party? Let's fucking party. $500,000 got in at 520 on AMC, 30-40 on GameStop. Roaring Kitty, you want to know who's on this ship? I'm on this fucking ship. Let's fucking go. I'm in. I'll see you tomorrow, DDTG. 9:25 sharp. let's fucking squeeze this shit to the moon. And if that Vlad Kenna fuckface tries to interfere, I'm coming for his fucking throat latch.
I thought that was funny when he said that. Oh boy. All right, here's another video he posted just this morning. He just had his live stream, so here's what he just said this morning.
We're back.
Oh no, that's music, dude. Fucking music's gonna get copyright.
Can I hear a 108 on GameStop? GameStop looks halted to me. I can't note 98, 115 on AMC. Who's hearing buy? Who wants what? GameStop at 60.38. I can't even tell. I don't know if my phone is keeping up with it. Up 108.
Dude, he's having fun. He's having so much fun. He's having so much fun. Oh my God, that's hilarious. That's hilarious, dude. He's loving this shit. Okay, GameStop's still halted. AMC is now halted. Reddit's up 4%. Faraday Futures up 160%. This is insanity. This is literal insanity, dude. This company was 9 cents. It's now 15 cents. It's insanity. Or sorry, no, it's 6 cents. Now it's 15 cents. Hollow's up 66%. Virgin Galactic up 26%. Tupperware's up 34%. Robinhood 1813 up 7.28%. Mullen up 13%. Beyond Meat up 14%. Where's SoFi? SoFi getting out. SoFi barely getting. SoFi's up 3.6%. Dude, SoFi is like not even. This is so sad. SoFi can't even move with the meme stocks. And SoFi is 19% short. Like this stock is so aggressively broken on SoFi. It's so annoying. But there you go. SoFi is at least up 30%. BlackBerry's up 15%. AMC is back in action. AMC 80%. Nice red candle right there that we're seeing on AMC. So we're seeing some sell side pressure. Pounter 2150. Okay, not bad. Again, even if Pounter gets to 23, I think that's justified. Hopefully it's not because of the meme reasons, but their earnings themselves justify at least 23, 24 on Palantir. AMC, a red candle. People are selling it off now. Still up 80% on the day. We got to wait till that turns green and there's enough buyers coming in. GameStop still halted. Wow. Still halted. It's going to have to open up eventually, but still halted. Faraday average of 9 cents. Congrats, Casey. That's incredible. SoFi's not a bank, not a tech company, and also not a meme. So annoying, dude. If I was Anthony Noto, tweet some shit, dude. Put some shit out there about SoFi. Get people excited. Like, this damn stock. Wow, Faraday Future is almost 20 cents, dude. 180%. Oh, my God. Oh, my goodness. You just look in amazement. I mean, there's nothing else to do here. It's just like, wow. It's pretty damn incredible, dude. AMC's halted. AMC's halted. It just fell 20%. It's halted. GameStop still halted. I think this is the most amount of halts I've seen ever in my life. I don't know if 2021 it got halted. Was it like this every day? Because I wasn't looking at the markets every single day in 2021. Was it like this where it would get halted every 5 seconds or some shit? Future says, Tanner says, if this continues for some time, how do you think this affects HUD earnings? I think Robinhood's going to the fucking moon, dude, if this keeps happening. Like, this is not a joke, guys. Like, if this is, every company would kill to have marketing like this happen for them at zero cost. They would pay millions for it if it happened at zero cost. I mean, the customer acquisition cost is going to go down the drain. It already went down last quarter. It's number 10 again on the finance apps. It's going to keep going down because they're adding so many users. Now, granted, these users are not the most sophisticated users, but it doesn't matter. Those people are going to get introduced to the platform. They're potentially going to like it. Even if they keep 5% of the million people they add, that's a ton of people that they're adding for zero cost. Also, they're going to resurrect a ton of users that haven't used the platform for years that might try to go back on the app, and that's going to be good for their numbers. And on top of that, it's not just that, it's the actual earnings have been fantastic. So you've got a ton of catalysts just intertwining with each other, plus interest rates might come down in the next 3 months. And if they don't, Robinhood still gets to make juicy net interest revenue. I think this is the best risk reward in the market. And I said that at $8, and I still think that's the same at 18. It's just a question of if the market is catching up. And if they don't catch up soon, they're going to catch up eventually, which creates a massive opportunity for Robinhood. And it says, what is the meme reason? Could you explain in short, Amit, please? Yeah, so essentially, the reason these are called meme stocks is because the entire cult following around something like a GameStop or an AMC, GameStop's not halted anymore, up 54%, falling still a little bit. It was at 67, now it's at 47. Is because the idea around buying these equities has nothing to do with their price to earnings, their price to books, their revenue growth, their net income, etc. It all has to do with the memification, which is just another fancy way of saying cult or tribal nature of what the company represents. And back in 2021, GameStop was shorted more than 100%, about 140%. And so what Keith Gill, Roaring Kitty, the guy on the thumbnail of this video, saw was that these hedge funds are preying on an innocent company to go out of business to be able to fuel their short their short profits, their profits from shorting the company. And to the point where they're getting so greedy, they're borrowing shares that don't even exist. And he thought that was unethical. He started the movement. He got a lot of people on band with him, and they shorted the crap out of GameStop. And as you can see right here in the max chart, GameStop went from $1 to $120 within 5 months. And one hedge fund, 0.72, I think, went out of business because of that. Or they had to totally start an entire new hedge fund. Like they lost like $6 billion. It was a lot of money. I think in total, it was like almost $20 billion that was lost throughout the entire saga. That's why this has been a memification type of story. And it seems like it's starting once again. It seems like that's happening once again. Okay, GameStop here at $47 right now. Melville Capital. Sorry, that was the name. Melville Capital. Yes, Melville Capital. At least there was fundamentals last time. This time it was just up on a tweet. That's true. GameStop, this is why I was skeptical yesterday. GameStop is not short 140%. It's short 24%. So yes, there will be a squeeze, but can that squeeze 120x a stock? I don't know. I don't know if that's possible. And also, is Roaring Kitty even talking about GameStop? What if he's talking about AMC? What if he loaded up a crap ton of AMC at $3 and now he's tweeting these movie clips and the movies has to do with AMC? And so he's like, yeah, AMC is the one I want to get excited about. These are the questions that I think we need to have answered until we really get to see what's going on. Okay, a little bit of a green candle forming now on GameStop. It bottomed at 45. Now it's at 49. So the buyers are coming back in and people are starting to buy a bit more. Is SoFi moving? Are we getting some momentum on SoFi? Okay, there we go. SoFi's up 5%. SoFi getting a little bit of momentum. Not bad for SoFi. Okay, my spreads are now. Let me see if I can close. Let's see if I can close one of these options. Let's see if they actually close. Let's see if the market's even willing to give me a price to close it at. I think SoFi would have to get to like 780, 790 before I can close any of these options. Because honestly, I'm ready to get out of these options. I don't want to stick around for these anymore. I think SoFi's earnings are going to be tough for the next couple of years, dude. It's a bank. It's a bank. It's a bank. It's a bank. It is what it is. And the tech side of the business is not growing dramatically enough. So let's see what happens to SoFi. I've got like $5,000 in there that I would honestly rather put somewhere else. I thought on earnings they would pump, and that didn't happen. So good thing is their 2026 option, so I can hold it for a long time, but I don't feel like holding it anymore. Now, granted, I do think by the end of the year, SoFi is closer to $12. I will say that. And so even though I don't want to have my money kind of stuck there, I do think by the end of the year, $12 is very possible for SoFi, just given they're going to be profitable for another 2 quarters. But we're going to see how it plays out. We're going to see how this ends up playing out. I'm just not excited to own it. That's the problem with SoFi. I'm just not excited to own it. So it's a small position anyway. So it's not like it's, some massive position. I'm just not excited anymore about it. And so, and honestly, you guys should thank me because as soon as I sell, this thing's going to fucking go to $10. So like, I'm doing everybody a favor, quite frankly. But let's see how it plays out. It's going to have to run a lot for me to even have liquidity to exit. So let's see if it even gives me the chance, if it actually proves it can get up there. Fubo's up 8%, Peloton's up 10%, BlackBerry up 12%. Let's see CNBC. Let's see if they're covering this, or if they're bringing on SEC lawyers saying that it's illegal to tweet about stuff. Let's see what they're saying. Let's see what they're talking about here about GameStop. Are they covering it? Are they covering it? They're talking about Comcast. No one cares about Comcast. Talking about Home Depot. No one cares about Home Depot. Lowe's. No one cares about Lowe's. Wow, they're really not covering it. They have not talked about it at all. Interesting. They're talking about OpenAI. Oh yeah, the OpenAI thing yesterday was cool, but it was interesting. I don't think it's going to be that. I mean, it's not that exciting right now. GPT-5 is going to be crazier. Yeah, they have not covered it yet on CNBC. I think they're deliberately waiting for this thing to really play out over a couple of days before they cover it, because I don't think they want to get blamed as like the company that's covering and adding fuel to this madness. But they haven't covered it at all. It's not there. Palantir 2150, that's up 2%. That's good. Okay, Faraday Futures up 150%. Robinhood up 7.5%. Save, Spirit Airlines up 3.3%. Tupperware up 31%. AMC and GameStop are halted again. Wow. AMC went from 8:30 to 9:24. Now it is halted once again. What do you think about SoFi then? Is it a game changer when you think about old American banks? Yes, it's a game changer. The problem is it's not being valued anything more than a bank. So you could argue, I mean, Tanner was on the channel and he said the tangible book value is $4 if you value it just like a bank, which means, you know, it's already a bit overvalued, right? So you have to be thinking, what's the bull case for SoFi outside of that? SoFi right now up 5%. That's nice on the day, seeing it move up a little bit. And the bull case probably is the tech platform, but the market doesn't care enough about that yet, right? And so I haven't used the bank per se, so I can't speak to how beautiful of an experience it is. I'm waiting for business accounts, and that's not on the bank yet. If that was, I would have moved a long time ago. But Bank of America, I don't hate Bank of America, you know? I know a lot of people think like, oh, the big banks are so bad. It's like, it's not. First of all, most of my money goes to Robinhood. So it's like Robinhood's basically my bank. Bank of America is just there for me to like sign documents and stuff when I'm like sending official money across the planet or something, right? So to me, it's not that big of a deal. I don't really hate my bank, so I don't really need a digital bank, but some people really do like the digital bank aspect of it. I've just never thought it was that exciting to me. How much is the short position on Novavax? Novavax. Okay, hold on. The stock for that. Oh, NVAX. Is that what you're talking about? NVAX is up 4% today. The short float on NVAX. I actually don't even know that company. I'm assuming it's a biopharmaceutical. NVAX is, wow, 33%. Maybe that's why that one's up a little bit as well. Over the past month, holy crap, dude. This thing was $4 on May 9th. How do you guys keep finding this shit, dude? Can you guys tell me before you just put it in the chat and like give me a heads up or something? DM me on Twitter or something? Goodness gracious. This thing was $4 4 days ago. Now it's at 13. Holy crap. Did they announce a new drug or something? Or is this all meme stock? What the heck, dude? Goodness gracious. Oh my. June says NVAX is a horrible company. Well, the stock is looking pretty damn good, even if the company's horrible. Okay, SoFi mooning. SoFi going up. Wow, SoFi 756. Let's see. Maybe SoFi is getting some momentum in them. I mean, we need to really break $8 for this to get fun, but SoFi's up a little bit right now. Lucid's up 16%. Yeah, NVAX up another 5% today. And then Palantir 2150 on the day. Robinhood 1825. Robinhood should be closer to $20, man. It should be closer to $20. The street's eventually going to recognize this. But I actually like that it's not mooning like crazy, because that means the next earnings, when they really solidify how serious of a company they are, it's going to be a Coinbase type of move, dude. It's going to be so fucking epic. I think, you know, this is my hypothesis. I think it's going to happen, but I think it's going to be pretty incredible. GameStop trading again. Okay. GameStop. Wow. GameStop's up. It went up from 49 to 53. There you go. Let's get to the 1 minute candle. There's the green candle. There we go. 49 to 53 on GameStop. 49 to 53 on the stop of games. Does anyone stop at GameStop, by the way, or shop at GameStop? Let me know. Does anyone actually shop there by any sense? If anyone does, I'd be very curious to see if anyone actually spends time there. I haven't gone to a GameStop in God knows how long, dude. It's been a minute. Up 76%. So still holding on, man. Up 70% in a day after being up 110% is insanity. This thing was $11 3 weeks ago, $19 Sunday night. Insane. Like once a year. Okay, some people actually go. You go to Steam. Yeah, a lot of people buy their stuff online. You got a controller from GameStop. Now, granted, I've never played video games. I mean, I played it when I was really young, but I don't play it too much. So that's why I don't go there. But if you play video games, I'm curious if you actually go there. Wow. GameStop, $54.92. Probably once a year. Yeah, some people still go there a little bit. Okay, so we got GameStop here. Robinhood 1834, DJT 5371, AMC back in action. AMC is not halted. AMC 10 Dolores up 92%. Still up. GameStop 82%. Look at those green candles. They're coming back in. The thing about when it goes up as well is like it's all psychology, right? People keep coming in when they see it go up. It got halted again. Goodness gracious. Right when it was going up, it got halted again. When GameStop goes higher, people come in. When it goes lower, so if it just continues to go a bit higher, all the new money starts coming in, and that's what gets the markets even more excited about GameStop, or at least retail about more excited. And so that's what we got. All right, here let's get Dave Portnoy. He's got some more updates for us. Let's see what he's saying about GameStop.
Trats 123. Capitalism is only for the elite guys, Davey, not elite enough. He's right. I'm not elite enough. I'm out here fighting. I'm just tooth and nail fighting with you poor people. Just the everyday Tom, Dick, and Harry's, the blue collar guys, the lunch pail guys, the guys driving the garbage trucks, the guy punching the 9 to 5, the guy waking up at 6 a.m. and sitting in traffic. I'm fighting arm in arm from the most expensive house ever sold in the history of Massachusetts, overlooking Nantucket Sound as the ferry comes in, fighting with you fuckers. Fighting. This guy's right. Trats 123.
Obviously, we know this guy's super rich, right? So the fact that he's having fun with this. Let's see what else he says.
I'm going to play this thing like a fiddle. How do you play a fiddle? How do you play a fiddle? The thing would go here like this. I'm going to play.
Oh my gosh, dude. This is hilarious. This is absolutely hilarious. This is insane. GameStop still halted. Let's get some coverage on this as it's been halted. Is it going to get out of here in a second? Let's see. We had Gunjan Banerjee on CNBC yesterday. She was talking. She actually did a documentary on all this meme stock momentum. Let's get her thoughts on what's going on this as well. This is incredible, dude.
As to why now? Why would Keith Gill, Roaring Kitty, decide that today, like a random, to Tom's point, a random day in May was the day to pop back up?
You know, it's interesting. We have seen these pockets of intense speculation, the meme stocks come roaring back from time to time. And I think they've become part of how our modern market functions. You know, we saw the Donald Trump staff get meme stockified, making up a word there. We saw this happen with the Silicon Valley Bank crisis. It's happened from time to time. I will say that it doesn't mean that happy days are necessarily here for individual investors, because I think there's a really ugly underbelly that's formed to the meme stock madness. And many individual investors I've interviewed didn't make money on meme stocks. In fact, they lost money. And I think seeing that eye-popping 40, 50% gain can be quite misleading sometimes.
I mean, look, she's not wrong here, dude. A lot of people lose money. I mean, people are making money right now, but a lot of people aren't selling. GameStop still halted. And if you're not selling, well, I mean, you're not really making money yet, right? And a lot of these people are thinking it's part of a movement. And when you're part of a movement, you don't want to go against the tribe. And if you go against the tribe by selling, well, you're not really going to make any profits. It's all going to be on paper. So I'll be curious to see, you know, when people actually start to liquidate. A lot of people, again, lost 90% of their shares, the value of their shares back in 2021, and they held on. Maybe it comes back and they may get made whole, but they would only break even. They wouldn't even make money if it gets back to some of these averages. So we got to really see how this thing plays out. AMC did do an equity offering today that those that missed $250 million, they diluted shareholders, and still the stock is up. It's halted right now. Still, it's up 100%, even with they dumping 70 million shares on the market. So people don't care. People are ready to buy. The liquidity does exist. Robinhood 1831 up 8.4%, 15%. So that one's falling now. That one has a nice red candle there, a series of red candles. That was up 187%. Mullins up 20%. Reddit's up 3.7%. Here's the interesting thing about Robinhood as well. When GameStop falls, let's say GameStop goes back to like $10, right? Let's say it has a 90% crash. I think the market would take Robinhood down with it. But the good thing is, what the market doesn't understand is that Robinhood's going to get all those users in the meantime that are going to become users of the platform, and they're going to have a better earnings in Q2. So even if Robinhood falls with GameStop, which I think will definitely happen because they're going to be algorithmically pegged to each other, they're going to get the benefit of everything that happened because of GameStop, and GameStop's going to have no benefit because their stock's just going to go up and down, right? Whereas Robinhood's going to get a shit ton of marketing for free and users, which is ultimately going to help them for the long term. So it's going to be really interesting to see how that plays out as well. Okay, we got GameStop halted and AMC halted. I think let me play this clip. I haven't played this clip in a while. Some of the people who are new to this channel might not have seen it. I did get to interview Mr. Vlad Tenev a while ago, and I asked him, I asked them what happened during the GameStop era. So let's watch this clip while they're halted, because we have a little bit of time until they get unhalted. It's about 3 minutes, and let's hear what Vlad's explanation was for GameStop and AMC back in 2021, and how they would be prepared to see if that happens again. Here we go.
2021, this was a wild time for you as a human being. You were on every TV show on the planet.
Hold on, we're unhalted. I'll go back to that in a second. We're unhalted. Let's go back to that. We just got unhalted. I'll go back to that in a second. All right, GameStop's rising. 83%. 83% on GameStop. What's the over and under if it gets halted again in the next 5 minutes? Put it in the chat. What do you think? Does it get halted again in the next 5 minutes? Oh, look at all those green orders coming in, dude. So many over the counter as well. 82%. That red is like even struggling to be a full red candle because there's so many people buying the dip. There's so many people buying. Where's SoFi? Is SoFi moving? SoFi is still up 6%. Not bad on SoFi, so that's good on SoFi. GameStop is still green. 70%. AMC is unhalted. Here you go. AMC 90%. AMC 93%. We've still got 5 hours left, dude. 5 hours left of this happening. That's crazy. Mr. AMJ says, admit the apes hate Robinhood. You should know this. I agree, but there's 2 data points that are very important. Number 1, GameStop is a top 10 holding across Robinhood. I shared this yesterday. It's Amazon, Microsoft, Meta, a bunch of other stocks, and then GameStop. So as much as the apes hate Robinhood, they're still using it, which speaks to Robinhood's moat. Like, the app is so good. Do you really think an ape is going to Schwab or Fidelity? Like, maybe a more sophisticated ape, but like a regular person who just like got into the investing community for the first time and is like, yes, go against the hedge funds. Do you think they're really setting up a Schwab account? So that's the first thing. Number 2 is Robinhood's number 10 on the App Store. So as much as people hated it, it's back. Wow, we got halted again. Was that literally 1 minute? Was that 1 minute we got halted again on GameStop? What the hell is going on, dude? That's like 7 halts in 20 minutes. The hell is going on? Jpow speaking? Hold on, Jpow speaking today? How come no one told me Jpow? Oh my God, Jpow speaking. He's here. He's live. Okay, do we guys want to watch Jpow? Yes or no? Do we want to watch him? Put it in the chat. Put it in the chat. Do we want to watch him? How did no one tell me this? Robinhood 1850. Yes. Okay, well, watch Jpow, and I'll periodically go to the price targets on GameStop. Here we go. Here's Jpow. Jerome Powell back in the house. Here's what he's got to say.
Influx of immigration into the country over the past couple of years, and those people are joining the labor force. We're experiencing still a labor shortage in many industries, and so there are jobs, and they're going to work and they're consuming. So that's also boosting growth. So overall, a good picture looking at the data so far. The labor market is very, very strong. It was, I think, overheated a couple of years back, and what we've seen is it coming back in gradually into a better balance over the last couple of years. And now I think if you look at a broad range of data, you could say that the labor market is about as tight as it was before the pandemic in 2019, and that's good. Real wages are now positive, and unemployment has been below 4% for 27 consecutive months, something that hasn't happened in a half century. So labor market very strong, and again, signs of gradual cooling and rebalancing, so that supply and demand of workers is coming back into balance, which just as we would want. Inflation, it's worth starting with the fact that on a 12-month basis, headline inflation got as high as 7.1%, is now down to 2.7%. Core inflation got as high as 5.6% and is now at 2.8%, so it's down by half. That progress, though, really happened over the course of last year, and particularly the second half of last year. The first quarter in the United States was notable for its lack of further progress on inflation. We had higher readings in the first quarter, and higher than we expected. We did not expect this to be a smooth road, but these were higher than I think anybody expected. And so what that has told us is that we'll need to be patient and let restrictive policy do its work. If I turn to the outlook just for a second, I would say we expect continued growth, 2% or better. We expect the labor market to continue to be strong, but to move further and further into balance. And I expect that inflation will move back down on a monthly level, on a monthly basis, to levels that were more like the lower readings we were having last year. I would say my confidence in that is not as high as it was, having seen these readings in the first 3 months of the year. So we're just going to have to see where the inflation data fall out. And I'll stop there with the economy. Thanks.
Thanks very much. We'll be digging into some of that later in the discussion, but now I'd like to turn to President Knot. Could you maybe give us a little bit of a sense of how you judge the state of play in the Eurozone and here in the Netherlands?
Yeah, I think the state of play in the Eurozone is not entirely comparable to that of the US. We just came out of more than a full year of economic stagnation. Now, luckily, the signs of recovery are clearly there. We started off the new year much stronger than we had expected. And if you look at the soft indicators, that recovery is expected to continue into the second quarter, and it's even expected to accelerate in the second half of the year. And this is mainly on the back of ongoing recovery in real wages, ongoing recovery in purchasing power, and strong consumer demand. Now, there are two ways in which you can look at this recovery. Of course, you can say, on the one hand, the economy has proven to be resilient. We've went through quite a number of shocks, monetary tightening, unprecedented, and yet we did not really go into a recession. The sacrifice ratio of the disinflation process that we had to go through was virtually zero. Unemployment did not budge. So resilience was there. But on the other hand, the growth was clearly not as abundant as it was in the US. And that is clearly remarkable. Now, I think there is a multiplicity of factors behind this growth differential, but if you allow me to single out the two most important factors in my view, first of all, fiscal policy. And this was not only about the size of the fiscal stimulus, it was also about the design of the fiscal stimulus during the pandemic. In the US, there was a choice for temporary layoffs, income support, and then rehiring when the economy reopened again. Well, that means that a lot of labor reallocation took place, and we know that such reallocation is very productivity enhancing. But in Europe, we chose a different approach. We chose an approach that was focused on job security. The governments essentially took over the wage bills of the firms. And as a consequence, we froze the supply side of our economy for a couple of years. Then during this period of stagnation, there was a lot of labor hoarding, which means that we have gone through a number of years where there has been hardly any labor or, for that matter, capital reallocation. So we have not enjoyed these efficiency benefits of reallocation as much as the US. And secondly, the economic impact, the negative economic impact of Russia's unjustifiable invasion into Ukraine were, of course, also much stronger on this side of the Atlantic than in the US. We are a fossil fuel importing area, so it meant that this was a very strong negative terms of trade shock, and this terms of trade shock of which we are recovering still also today. Now, on inflation, I think the picture is that I'm increasingly confident that inflation will decline towards our 2% target during the remainder of the year. This is mainly on the back of goods and food price inflation that is coming down. Services inflation has been resilient for a while, but we're now also seeing the first signs of improvement there. And that has everything to do with a slow but gradual moderation of wage growth, which is quite essential, I think, also going forward in making an assessment of inflation risks. But all these developments clearly point toward further disinflation. Also here, an intriguing question is, of course, is there more similarity or are there more dissimilarities with the development in the US? From the onset of the inflation shock, it was clear that the balance of root causes between, let's say, positive demand shocks and negative supply shocks was different in Europe from the US. The US had a much stronger demand component. I think we had a much stronger supply component. Yet at the same time, there was a remarkable synchronicity if you look at the development of actual inflation. So the bump that you've been seeing in the US, the question for us now is, are we going to see such a bumpy development as well? So far, we've not seen any evidence of it, but that's clearly a warning signal for us, also not to come with any sort of premature declarations of victory. All in all, I do believe that inflation is probably less persistent in the euro area than in the US. And that leads me then to conclude that if we manage to continue on this track, if the incoming data continues to validate this development, that it will be appropriate for us to gradually take our foot off the brake, to remove some of the restriction, the monetary policy restriction that we're currently imposing on the economy. The data that needs to confirm this, a lot of that will be available at our June meeting. We will have an additional data point on the labor market coming out next week, the triangulation between wage growth, productivity growth, and profit margins, which is important. Then we will have new projections. And I'm confident, again, that if they confirm the picture, as I just sketched it, that June will be a good opportunity to make a first move in removing restriction.
Okay, very clear hint at June there. We'll come back to whether we could see further moves in July too. But just to draw on some of your comments there, you seem broadly confident that inflation is going to prove less of a problem in the Eurozone than it seems to be at the US at present. And we've seen quite a reasonably high PPI reading today from the US, Chair Powell. Some people have said that looks hot. What do you think of today's reading? And more broadly, is there a risk that inflation becomes a lot more of a problem in the US than it is elsewhere?
So we had a producer price index reading just a couple of hours ago, and I would say it's actually quite mixed. The headline numbers were higher, but there were backward revisions, and we're of course disassembling it, taking it apart, and looking at it. And I think markets and analysts are looking at it as I wouldn't call it hot. I would call it sort of mixed. But in terms of the overall picture for inflation, I think you have to go back to last year, where we had historically fast disinflation. Inflation came down by two full percentage points last year. Why did that happen? It's really two forces working together. One of them is just the reversal, the unwinding of the pandemic-related supply and demand shocks. So that we thought we would always get that. We thought we'd get it in 2022, and we didn't, and then it really arrived in 2021. So that was a big part of this, was just the reversal of distortions really to both supply and demand. The second thing is just restrictive monetary policy, and restrictive monetary policy cools the economy and makes room for the supply side to heal, but also lowers demand and ultimately lowers inflation. So I do think those two have been working together. And the question you ask is inflation going to be more persistent going forward? I think, and that would essentially mean that we've gotten the supply side gains that we're going to get, and now it's down to lower demand, which would take longer and potentially be more painful. I don't think we know that yet. I think we need more than a quarter's worth of data to really make a judgment on that. We know that there are still, businesses still report that there are shortages and labor shortages and things like that, which are now being addressed. In addition, even when the shortage is alleviated, there should be lags before that shows up in economic activity and inflation. So there may be some more there. I don't want to give up on it yet at this point. I also think that having restrictive policy, we have the highest interest rates in some time. I think that it may be that takes longer than expected to do its work and bring inflation down. I am confident that we will do that, but that we will get inflation down to 2%, and ultimately we will do what we need to do with our policy rate.
And just to bring in a question that one of our members of the audience asked here, I mean, you referred to it briefly then, but from Edin at ORV, he asked, do you entertain the possibility that returning to the 2% target will not be possible with the current level of the Fed funds rate?
So I think, as I just mentioned, I do think it's really a question of keeping policy at the current rate for a longer time than had been thought. I think by many measures, the policy rate is restrictive. The question is it sufficiently restrictive? And I think that's going to be a question that time will have to tell. Entertain the possibility is, that could be a very small probability, but I have said that I don't think that it's likely, based on the data that we have, that the next move that we make would be a rate hike. I think it's more likely that we'll be at a place where we hold the policy rate where it is.
And is there any particular component of inflation that concerns you? A lot of people in the US have been focusing on housing and that segment, but is there that, or is it something else that?
So we think of it in three buckets. The first of which is just goods inflation, and goods inflation was negative for 25 years, mildly negative because, of course, globalization and many goods were manufactured elsewhere and shipped at lower costs. So that, I think, is performing broadly as expected over time. We had very high goods inflation at the beginning of the pandemic because of the supply chain issues. That came down a lot, and I think we expect that. Housing inflation has been a bit of a puzzle because current rents have been low. Current rent increases have been low for some time, but they're not showing up. That's not showing up in rollover leases and in owner's equivalent rent. So, I think what we've learned is that the lags between a decline in market rents and it showing up in the measured inflation for housing services is long. Their lags are longer than we thought. But as long as market rents don't go, as long as they're going up at very modest levels, it will show up. It's just a question of when. I think our estimate of the lags is there, and so you've got to look at that. That may affect your confidence, but we have to wait for it to happen. In terms of the biggest part of it is services inflation, non-housing services, and that's more than half of the index. And it's less interest sensitive. It's very sensitive to wages and that kind of thing. We had made some progress there, particularly if you look at the market-based aspects of it. But that's the one that I think may take the longest. At the same time, it doesn't need to go to 2%. It wasn't at 2% before the pandemic. You need the three of those to come out in some way that they're at 2%. And I'm confident that we will get there.
Excellent. And just to go back into this theme of divergence, I mean, to summarize your answer, it seems that, you think the geopolitical aspect of the Europe being closer to Russia, and also the aspect of I guess, not only the scale, but the design of the fiscal response, are the primary drivers of this divergence that we've seen between the US and Europe. Chair Powell, what would your thoughts be on this? Are there other factors that you think are worthy of consideration when trying to understand why the US and Europe seem quite different economic beasts at the moment?
So I agree with all of the factors Klaus laid out. I would add we're probably also benefiting from a sort of strictly accounting GDP standard from new workers coming in to a large extent. I think the issue really is, and this is an issue that that the European economic policymakers are very, very focused on right now, is over the longer run, Europe's productivity growth has been about half of the US. And so ultimately all you've got is hours worked, and that's largely a function of population, hours worked, and then output per hour. That's going to be your economic activity and growth. And so productivity is, really the thing that can enable living standards to rise over time. And, there are a lot of theories on why that might be. I think from an American perspective, I would tend to point to the more flexible labor market, and also a more fully built out set of capital markets, which is parts of which are very focused on funding early stage innovative companies. So it's not just a bank centric system. We've got a very highly evolved, financial system. That may be another factor.
Yeah. So plenty of other reasons there that are worth mentioning, I think. Turning back to you, President Knut, you gave a pretty clear signal, I think, that we're going to see a move in June. But a lot of the questions that people have put to us today have, stressed this point of, usually there's been this sense that the ECB has been following the Fed, and it's raised a bit of a question mark as to what degree can the policies of, the two major global central banks, with apologies to the Bank of England, how much divergence can we really see? So to what extent do you feel constrained by what the US central bank does, and would you perhaps be reluctant to cut in July should the Fed want to, stand pat and leave rates as they are for the foreseeable future?
Look, I think if you talk about monetary policy of big central banks like the Fed and the ECB, that monetary policy always takes place in a global context. I mean, our markets are interwoven to a large extent, etc. At the same time, we both have clear domestic mandates that look on an economy which may be 10, 50% open, but it means at least 85% closed economy. So much of our inflation is actually being triggered still by domestic factors. So what we simply need to do is construct our own inflation outlook for the euro area. And yes, Fed policy is, of course, one factor that has an impact. And if you think about international spillovers, the first things that comes to mind is through the exchange rate. If the Fed were to run a tighter ship than we were going forward, then probably that would lead to some dollar strength and euro depreciation, which of course leads to additional imported inflation. But at the same time, you will also have a spillover effect through global financial conditions. Bond yields internationally are also moving in tandem. If you look at the last few weeks and months, bond yields in the euro area have gone up significantly without there being a true euro area reason for doing that. It was just the spillover from the US. And that effect is, of course, disinflationary. So if you look at the two effects, it's not so clear which of the two will dominate. And it's therefore also not so clear whether the developments in the US will really have a meaningful impact on the inflation outlook in the euro area. I don't think it will change the direction of travel in the euro area that much.
So you'd be willing to cut in July too?
Well, we've been saying all along that we follow a data-dependent and a meeting-by-meeting approach. And I keep repeating here, it is essential what is happening in the labor market in particular, because services inflation is still the main remaining driver of inflation in the euro area. So we will simply have to follow the data as it comes in, both on underlying inflation trends, the labor market, etc. And that's why there is no commitment beyond June. We will just follow a meeting by meeting and a data-driven approach. And data, when it comes to the labor market, it's really about the comprehensive assessment of the labor market. It's too simple to just look at sort of contractual wages. Contractual wages are coming down. But one of the problems now is that we have negative productivity growth in the euro area. We had negative productivity growth in Q4. In Q1, again, it seems as if growth in employment exceeds growth in GDP, which means that probably next week we will get another negative productivity growth number. And that means that unit labor costs are actually still going up. And then the question whether profit margins are capable of continuing to absorb these unit labor costs, that's something that we really have to assess over time when we decide on future steps. So nothing, no commitment whatsoever, open mind for anything beyond June.
And just to turn back to the issue of US inflation for a moment, even though there's this sense that we did see a remarkable drop of inflation last year because it was, just so aggressive the year before that, that there is this sense that, there's still a public perception that prices are very high. How difficult is it to really feel as though you can keep credibility at times when trust in public institutions is under siege? And that's from Jeroen Broekman, who's from Leaders in Finance.
So I think for central banks, credibility is kind of everything. And we only earn that one way, and that's by achieving our mandate for the benefit of the public over time. And also, I would add, a part of that is sticking to our knitting. Don't take on politically fraught issues that are really not our mandate. Do your job and explain as best you can what's happening in the economy. Of course, the economy the post-pandemic economy has surprised everyone. I wouldn't single out any single central bank or group of forecasters. It's just been many things that were not supposed to be able to happen have happened. Nonetheless, we've made real progress on inflation. We're far lower than we were. I would say the risk that at the beginning we were very concerned that the very high inflation we saw might be quite difficult to bring down without a kind of very significant decline in employment and weakening economic activity. That didn't happen. That's just a great result. I think people are unhappy. You mentioned people are unhappy. That fully appreciate that. And a big part of that, I think, is go to the store. Prices are high. You tell people inflation is coming down, and they think, I don't understand that. The price of all the things that I buy hasn't come down. So, they're not wrong. I mean, they're suffering. Particularly people at the lower end of the income spectrum are very hard hit by inflation from the start, which is why we're so strongly committed to restoring price stability and keeping it in place as long as possible.
And just to turn back to Europe now and to the Netherlands in particular, we're sitting in a venue here that's really testament to the power of trade for good and ill. In an era of deglobalization, when we're seeing daily headlines about tariffs, and how does the Netherlands as a small open economy, and indeed the Eurozone as a very trade-dependent region, really thrive?
Yeah, that's a difficult question. I mean, it goes beyond saying that this is a development that is absolutely not a positive development for the euro area, and that we watch with a lot of concern. Now, fragmentation is there. The train has left the station. So, I mean, we have to think about sort of the ways that it can manifest itself and what we can do to try to best redress its consequences. There is a sense that international business is actually to some extent more resilient to political fragmentation than we have been thinking beforehand. So that international trade is a little bit like a river that sort of tends to find its way, even if some obstacles are being raised here and there. But of course, the fragmentation, it impedes the diffusion of technology across borders. So that means lower productivity growth everywhere. I would also not underestimate the limitations that it puts on our capacity jointly and internationally to solve global problems. In a fragmented world, suppose we had a global financial crisis again, like in 2008, 2009. It would be much, much more difficult to get the G20 around the table and to agree on a concerted remedial plan as we did in 2008, 2009, think about climate change, etc. What can we do about it? Well, I think in Europe, there is still a lot of untapped potential to at least strengthen our internal cohesion. We're not tapping the full potential of the single market. In many, many places, the single market only exists in a name. We don't have capital markets union. I think we are really doing ourselves a disfavor. We don't have a banking union yet. And so we are missing out on opportunities to strengthen international trade, or sorry, inter-European, I should say, trade and integration, economic as well as financial.
Would you have anything to add on this topic? I know it's something that's featured in the Fed minutes about the links perhaps between trade barriers and inflation and so on. Do you see it as a risk?
So this is a very, very hot political issue, not just in the United States, but everywhere in the world. And not trade policy, of course, not the job of the Fed. So, I mean, we, as I mentioned a few moments ago, I think we need to resist the temptation to just have opinions on all different kinds of economic policies, as fun as that might be. You know, the elected government has to deal with these things, and they have to deal with the public on them. And they've given us really important assignments, and I think we need to honor the decision not to give us that.
And I appreciate this is also an awkward topic, but it is deficits in the sense that the national debt is forecast to rise by the Congressional Budget Office quite substantially over the next 10 years. Does that make your life trickier as Fed chair rather too?
I don't think it's not that it makes my life more difficult or the Fed's work more difficult, but I think it's you know, utterly non-controversial to say that U.S. fiscal policy is on an unsustainable path. Not that our fiscal position itself is unsustainable, but the path is unsustainable, meaning that we have full employment and we're running big structural deficits, and it's we're going to have to deal with this sooner or later, and sooner is a lot more attractive than later. I do hear from elected people on both sides of Capitol Hill and in both political parties that they do understand this. And I think you mentioned the Congressional Budget Office. I think everyone should be reading the things that they're publishing about the U.S. budget deficit and the path, and should be very concerned that this is something that elected people need to get their arms around sooner rather than later.
And you've noticed a lot, you've noted a lot that these supply side benefits that you thought might come in 2021 or 2022 did actually arrive in 2023. Now, what sort of benefits from the supply side do you think we could see in 2024 and beyond?
So I think we probably have realized most of the reversal of the pandemic supply side effects, but not all of it. But I think we get more sort of the final parts of the supply chains really getting sorted out. As I mentioned, the surveys of businesses, they still say there are shortages. They still say that they have a hard time hiring people, for that matter. So I do think we're still getting very substantial numbers of people coming to the country and going to work. Let me add, immigration also not a policy that the Fed works on or has opinions on, but I'm just giving you the straight economics of it. People come in, they can get a work permit, they are getting work permits, and they go to work and they're paying taxes and they're creating economic output, and there are millions of them. So it's alleviating the labor shortage that we had in the industries that really had it the worst. So I think all of that, it probably helped at the margin a little bit in cooling the labor market off. It's both supply and demand, but we think at the beginning, in the longer run, it should be neutral on inflation, but in the short run, it might have been positive. So I think that's a factor too.
And just to kind of tend to these like broader demographic trends, there's been a lot of talk in recent years about how they will impact inflation, whether they have some sort of impact on R-star, the kind of, the Goldilocks level of interest rates in the longer term, one might say. I mean, how do you think about these kind of longer term demographic trends and other factors and how they're going to influence where you see this kind of magical Goldilocks neutral rate of interest?
So the R-star, for those of you who aren't central bankers who read every word of every story Claire writes about us, R-star is really a longer run concept. R-star is a neutral interest rate that would neither push up on economic activity nor bring it down at some hypothetical future time when we're at full employment, we're at 2% inflation, and there are no shocks hitting the economy. So think 5-6 years down the road, there's this sort of nirvana out there. Its relevance for current policy making is kind of limited, and I think you need to say that. Really what we're doing in an FOMC meeting is we're looking at the broad effect of the things that we're doing on the economy, and we're asking ourselves, is policy tight enough? Is it too tight? We're looking at what's happening in the economy. We're thinking about lags, and it's not a debate over the level of R-star, because that's a longer run concept. Now, and the argument is made that R-star will go up, and this is a debate that economists have been having for some years now. But the idea is, between deglobalization and the need to fund the energy transition, and perhaps the need to spend more on military and the aging of the population, bigger deficits, higher, all of that could push up what is a neutral rate. And I think those are the interesting debates to have. But ultimately, we're not sitting around wondering what the longer run neutral rate is when we do policy. When we make policy, we're thinking today, is our policy delivering what the economy needs to move it toward the mandates that Congress has given us: stable prices, maximum employment.
So would you divorce it? I mean, I think why this has come into focus, if you like, is because now that cuts are being considered in some parts of the world. At least there's this sense in which people are thinking, how low will rates go? Would you see that as part of the kind of R-star debate, or would you want to divorce the two factors of this current cycle and where R-star will end up being?
I think the R-star debate runs in the background, but again, it's a longer run concept. You could, if you wanted to think about a shorter run R-star, that would be more relevant. But that's not the way we think about it. We think about the effect of the things we're doing on financial conditions more broadly and on the economy, and how is it affecting the economy, and why, and all of those things lead us to believe at this time that policy is restrictive and that it looks like it will take longer for us to become confident that inflation is coming down to 2% over time.
And how is this debate occurring around the table in Frankfurt at the ECB about longer run interest rates, or even, where are we going to end up? What's the rock bottom for this cycle?
Yeah, I mean, that's of course a difficult question to ask because there are so many moving parts here. But what I would say is that if you look at the likelihood or the likely nature of the shocks that will hit us in the future, we came out of a period in which we had globalization, which was a slowly moving positive supply shock, ever more goods for ever lower prices coming from the rest of the world, which meant that for almost 10 years, we continuously had to approach our inflation target from below. We had a low inflation problem. Going forward with fragmentation, with aging of our societies, in my view, it's more likely that the shocks hitting our economy will actually be of the nature of negative supply shocks, not positive supply shocks. And if you think that through, that means that probably we will have to approach our inflation target more often from above than from below. And that probably suggests that we are not, that at least I don't regard it very likely, that we will move back to the time in which we had a continuous sort of our fairly persistent low inflation equilibrium with very, very low interest rates. We probably have to, on average, run a slightly tighter ship because of the nature of these shocks that are currently relevant to our economy.
And just to come back to something that I think has been kind of in the background here for quite a lot of the discussion about high interest rates taking possibly a while longer till they have the desired impact on some pockets of the economy. How do you see that? Is this a legacy of this very low interest rate era? And how do you really address that when it comes to monetary policy? That, is there just going to be this lag from now on that didn't exist, say, relative to pre-2008?
So I think if you look at the bigger picture, we've seen the labor market's a good place to see this. You've seen demand for workers cooling off pretty substantially. The ratio of vacancies to unemployed people, for example, has gone from more than 2 to 1 to now 1.3 to 1, and it was 1.2 before. So that's a decline in demand. That's demand related. You also see wages coming down. You see quits coming down. So I think that tells you that policy is probably restrictive. I think it's also fair to say, though, that the U.S. economy is different this time for a couple reasons. One is that people financed themselves into very low rate mortgages, and now they won't move because they would be moving into a higher rate mortgage if they did, and they would be throwing a lot of value away. The same is true of businesses, many of which, as indeed you would expect, have termed out their debt. And so they're not feeling the effects of interest rates. So it may be that policy is hitting the economy not quite as strongly as it would have if those two things were not the case. Notwithstanding that, I think the overall picture still is policy's working. It's weighing on spending. It's weighing on interest-sensitive spending, and it's certainly weighing on the labor market. It's a question of restrictive policy. As I mentioned, our policy is the highest it's been in quite some time. The rate is, at 5.25% to 5.5% is high relative to recent history. So we think that it's probably a matter of just staying at that stance for longer, and that's how we're thinking about it.
And I mean, you note about housing and about the standard model in the US being I think I'm right, the 30-year mortgage is kind of the standard mortgage product. I think here in the Netherlands, flexible rates are quite more fixed rates.
Yes, absolutely.
So fixed rates are quite common too, but I imagine with shorter
10, 15,
duration.
An average mortgage, I think, has an average maturity of like 16 years. Of course, that's a little bit endogenous because of the low interest rate period we had for so long that, of course, mortgage holders tended to extend the maturity. So now, lately, it's been coming in a little bit. But still, we have a lot of fixed rate borrowing in the Netherlands, and that has, of course, also mitigated the impact of the monetary tightening, which has been stronger in those areas where there is more variable rate borrowing. But in general, I would say 85% of all financial intermediation in the euro area runs through the banks. So when you look at monetary transmission in the euro area, you have to look at credit. And credit growth has more or less come to a halt. As a consequence, we increased policy rates by 4.5% within 14 months. Credit growth came to a halt. That was a feature of the policy, not a bug. And credit has been flat for quite a while. And now we're also beginning to see the first signs of life again. Now that there is an anticipation that our next interest rate move will be a reduction of rates, you also see the first signs of recovery in credit. So in that sense, I think this is more or less how you would expect monetary transmission to take place in the euro area.
And how much of an issue has that been for you in the US, where we do have this, where capital markets play a far greater role, and where, for reasons that were never quite clear to myself, the turn of the year,
Guys, this will be done in 2 minutes, then we'll go back to charts.
Markets were predicting, 6 interest rate cuts by the Fed, and pricing credit off the back of that, and there being quite a big, quite substantial growth in lending and refinancing over the first couple of months of the year. How much more difficult does that really make your task that the banks aren't as big a vehicle?
Well, so for what it's worth, it's a minority of intervention, but banks are still important, and particularly for small and medium-sized businesses that don't have capital market access. And credit has been tighter for some time now, particularly in the wake of the turmoil we saw earlier last year. But still, credit growth has been modest, and that's another sign of tight financial policy. So that's part of the picture. I think the fact that we have capital markets are so important for many consumer loans of various kinds wind up in the capital markets or securitized and are not held by banks. It's just that it's a very healthy credit machine for people, but they're feeling these higher. Those are short-term interest rates. I think that the ones that are longer-term interest rates are the ones where they're not feeling it, and that's really mortgages, and that's companies that have turned out their debt. I think other forms of consumer debt are short-term, and the surveys show that people think it's not a good time to buy durable goods like cars and washing machines, and the reason is it's a floating rate loan at a very high level.
Absolutely. And when you look at the banking system as a whole, we've seen some jitters, I think, on both sides of the Atlantic, but on the whole, it seems both systems are relatively stable despite quite substantial rises in interest rates. Has that surprised you at all? Maybe first to Chair Powell and then to President Knott.
Has it surprised? Not really. Our banks are particularly our large banks are strong, well capitalized, very successful competitively, globally. They're in I think one of the reasons why the recovery broadly around the world from the pandemic has been strong as opposed to the one from the global financial crisis is that the very large financial institutions came through just fine. The U.S. banking system overall is in good shape. Banks are making loans, as I mentioned. Credit conditions are a bit tight, but that's part of our policy. So I wouldn't say I'm surprised. I think we obviously had a period of turmoil early last year, and we acted pretty quickly to stem the turmoil and also to go to work as a supervisor and make sure that banks had good plans on liquidity, had capital, understood the portfolio losses that they have for longer run securities, and are in a position to understand and manage those.
Well, I think it's pretty clear that if you have such an unprecedented rise in interest rates in such a short period of time, that this constitutes a massive shock to the financial system. So,
all right, there we go. We got a lot of stuff from this call. I mean, the big stuff is that PPI, Jpow said it was mixed, not hot. Now, I think Jpow knows the CPI, if I'm not wrong. I actually don't know if he gets to learn in real time with us. I'm pretty sure he gets to know before. He looks kind of relaxed. GameStop right here up 57%. He looks pretty relaxed. Doesn't seem like he's that upset. So if that's the case, maybe CPI is going to come in colder than expected. And if CPI is actually cold, I mean, this is going to be fun. Now, I did make a move while we were watching that. I got rid of my entire SoFi position. So I took a $500 loss. I figured, it's better I take a $500 loss than wait till this thing goes back down to like 680 and I'm stuck down like $2,000. And I got rid of SoFi. Now, I did this for two reasons. It's less to do with SoFi, to be honest. I kind of just needed to raise cash, and I got about $4,300 out of this. And so, lose $500, that's okay. I mean, so far in the stock market this year, I've realized profits of about $20,000. I'll actually show that right now. So to me, the $500 loss is like not that big of a deal. But I did want to raise some cash because I do feel like I'm lacking when it comes to cash. Not cash to buy GameStop and AMC, not doing that. But I did want to raise some cash and get that there. So this is I don't know if you guys have seen this. This is my tracker. I shared this on Twitter a while ago. So this is how much money I've realized in the stock market this year, not on paper, but realized. So these are all the symbols. So far, we have made, we invested 71 grand. We brought in 85 grand. We took a profit of 19,000. So this is from selling Robinhood options, TFC, SoFi, Palantir, Google, CleanSpark, etc. We made about 19 grand. So it took a $500 loss on this one. So this one we brought in at like 4,200. So this is negative. And we lost a little bit there. But I did raise some cash, and now I'm looking at portfolio. Let me do the math right here. Now I'm looking at a portfolio of about 5% of cash, which is good. So we got 5% in cash. We can deploy it against opportunities, not doing it against GameStop or AMC. Honestly, the reason I wanted to raise some cash is because if Robinhood dips even further. Robinhood at 1836, it topped out at 1850. This sucker gets back down to 16. This is a buy the freaking dip. Q2 is about to explode beyond what Wall Street can expect. And so if for some reason, let's say GameStop goes to like $20 and Wall Street's like, oh, GameStop's down, Wall Street, Robinhood should be down, that's going to be a dip opportunity. So we got basically a good $7 grand to deploy against something, against Robinhood if it goes down. And so we'll see how that plays out. Someone says Amit has this FOMO cash. I told you guys, I'm not buying GameStop or AMC. I'm not doing it. As much as I love the whole memification of it, I'm just not doing it. It's not the type of investing I want to do. It's also, I'm not at the financial situation where I can afford to lose 7 grand or 10 grand and be like, oh, no problem. It's like, no, I actually need that money. Like I'm not there yet in life. So I'm not going to be gambling on these. But I do want to get more Robinhood if it goes down to 16, because if it goes down to 16, I think that's going to be an amazing opportunity. And I think the street might be dumb enough to take it down to 16 when GameStop eventually comes back down, if GameStop ends up coming down. So we got GameStop here, 55%, not getting halted anymore because it's not being as volatile to the upside or downside. So the halts got GameStop out of the situation. AMC at 935, up 80% right now. AMC just below $10, but that one's not getting halted either. So it seems like the brokerages are kind of letting them do what they need to do. Maybe some of the buying pressure is not as intense as it was before for a halt. Still 60% in a day is absolutely incredible. If you bought the top at around $65, honestly, I think it's going to get past 65 in the next coming days if this continues. So I don't think it's the worst thing in the world. Just like yesterday, people were getting annoyed at other people for buying the top at 38. People were making fun of other people. Or Dave Portnoy, who got in at $30, which was not the top, but it was close to the top. I mean, he's up, right? Because another day, another momentum, more opportunities. So maybe 65 really isn't the full top of this machine. What about PayPal Amit? What do you think? I have my PayPal options. They're still down 60%. Unfortunately, I thought PayPal had a phenomenal earnings. This sucker's at $64.47, should be at $75 after those earnings. We'll see what happens with PayPal. I'm going to hold that till the end of the year because I do think PayPal is just like deeply undervalued, like beyond, like it is. I think the market knows, but they're just not willing to give the premium yet. So we'll give it a year and or give it a few months and see what happens. SoFi, unfortunately, their earnings just weren't good enough, I think, to justify a huge multiple. And I hope this thing goes up. I still have my sister's options on SoFi that she got at $4. I'm waiting till the end of the year to sell those. So if SoFi goes to $12, she makes $30,000. Right now, she's at like $8,000. So I'm hoping SoFi goes to $12, dude. There's not a bone in my body that does not want SoFi to get up to $10, $11 because my sister's going to make a ton of money and I'll be happy for her, right? But for me, I just need the cash to deploy in other places. And right now, I don't know if the market's willing to give them the momentum. So we got SoFi 764 topped out at 754. If it can hold that momentum, maybe tomorrow makes a run at $8, which would be really good. Rivian here at 1143, up 4.86%. Novax 1389 at 5.9%. Let's go to the DGen portfolio. BlackBerry's still up 15%. Reddit's up 7%. DJT's up 4%. AMC up 78%. GameStop still 60%. Robinhood 1828 up 8.2% on the day. If we can even hold 8%, I would be very happy. Again, Robinhood number 10 on the iOS App Store for finance, which means they are starting to shoot up the rankings. Spirit Airlines up 10%. Beyond Meat up 22% as well. How can E-Trade go down yesterday and SoFi can go down this morning and no one says crap, but if Robinhood lags on their GME buy order for 2 seconds, people freak out? Well, it is how the narrative has been formed against Robinhood. And unfortunately, that narrative is bad. But here's the thing. Robinhood has an opportunity to redeem itself. You know, there's moments in life where you get a chance to like make up for the wrongs. They definitely screwed up in 2021. We know they screwed up. This is a chance for them to finally show that they're a brokerage that can handle the volatility and that they weren't trying to screw people over. It actually was an honest mistake. A lot of people said they were conspiring with Ken Griffin. I think that's bullshit. I think they just made a mistake. This is the time where they can show, actually, no, we're better than a lot of the other brokerages and we're not going to mess up. And if that's the case, I think they're going to gain a lot of credibility and it's going to be better for their Q2 earnings as well. SoFi and Webull went down this morning because of the clearing company, not their platform. Yeah, same thing with Robinhood. It's always the clearinghouse. It's not really the platform. Like a lot of these brokerages are just middlemen to be able to connect you with the shares that are at the clearinghouses. So I don't even blame SoFi or E-Trade or Webull because I have sympathy for them. But unfortunately, the narrative gets formed that way. And the narrative has been against Robinhood for about 2 years now. Amit, are you considering Virgin Galactic? I'm not. I'm not considering any of these meme stocks, dude. Faraday Future up 117%. Virgin Galactic. All of these will end badly, in my opinion. Eventually, they will end badly. I don't know whether they're going to end badly tomorrow or in 5 months when they've gone up 10x. And I'm not willing to take that bet at this stage of my life, given my financial position. If I had a lot of fuck you money, then sure, I'd be willing to take that bet. Not now. I mean, just it's tough to do that. And so the only one that I think survives out of this is Robinhood because they get all the benefit from it, and probably Reddit because they get a ton of engagement. But the rest of these guys, eventually the market realizes these companies are ridiculously overvalued, paying 3,000 PE at this point, a 4,889.5 PE for GameStop probably doesn't make sense. But again, people are buying it for different reasons. The question is, are there enough people can the music keep playing? You know, are there enough people willing to listen to the music to get this thing to keep forming, or does it eventually die out and people take their profits? We got a big green candle right here. Oh, wow. Look at that green candle. Went from 48 to 51 right there, up 67%. That's 7% in like 30 seconds. So we got a nice green candle forming right there on GameStop. And we got to see how this play out. Amit is not one of the apes. That is correct. I'm not one of the apes, but I do have a lot of sympathy for the apes, given the video we saw this morning about Jay Clayton from the SEC saying that what Roaring Kitty might be doing is illegal. I mean, when you say shit like that, you're going to piss off a lot of people. Did he tweet yet? Let's see. He has 1 million followers. He just got 1 million followers. That's insane. He has not tweeted since 14 hours ago. But he does have 1 million followers now. He had 400,000 a couple of days ago. That's insane, dude. It's like, this guy is like, he's got the whole world waiting to see what he's going to do. Sun Power, 63%, Tupperware, 24%. Amid having carefully listened to you, are you willing to go all in on a short-term YOLO options play on GameStop? I am not. I know other people might be willing to do that. I am not. The thing is, if you do a short-term, like, I saw on Reddit, like, I think some dude was up like, some dude made 27,000 to 2 million yesterday on options. If he sold, we don't know if he sold yet, but he theoretically was up $2 million on some like May 17th expiring options. I think it's a smart idea if you believe that the thing is actually going to pump, but you have to believe that, right? Like if you think GameStop's going to $70 and you buy a $70 call, in fact, let's look at the options chain. If you buy a $70 call for this week, which is probably up a lot today, you got to really believe it's going to go not just to 70, but higher than 70. And if that doesn't happen, it's not a smart idea. So the question becomes, what is your conviction on the options chain around something like a GameStop? And if there's not a lot of conviction, like if there was a lot of conviction at $10 that it was going to 30, that makes sense. If there's not a lot of conviction from 50, it's going to 70. I don't think YOLOing options on the short term makes a lot of sense, especially because there's already been so much juice that has been achieved. Okay, so let's look at May 17th. Yeah, May 17th, these calls. Well, that's weird. Why isn't it showing the percentage change? It should be showing the percentage change. May 24th. Oh, that's weird. It's not showing that. Let me go on my phone. Maybe it'll show it there. It's bugging out a little bit. It should be showing how much these guys are up. Okay, so if we trade options, May 17th. Wow, that's weird. There must be so many people. Robinhood must not have the... What about January 2025? Okay, so at least we can look at January 2025. So January 2025 options, they're all up. As you can see right there, 160%, right? All of those. The ones that are expiring on Friday are probably up closer to like 1,000%. But for some reason, it's not showing it on Robinhood. But these guys are up a lot. Like the $55 call, there's 3,000 open interest. Yeah, look at this, dude. Look at this. Look at this, dude. It's up like 1,000% today, and there's 3,000 open interest. So 3,000 people already bought the $55 call for expiring on Friday. So people are already aping into these calls that are expiring this week. $57 call, $54 call, 53. Yeah, 55 is the most open interest. The $50 call has 163. And then the $45 call had 95. So a lot of people are still buying the May 17th options. Your AMC calls are up 400%. Yep. I mean, there's a lot of money there. There's a lot of money there being made. AMC right now up 79%. Now, here's the thing. Here's the question. Let me ask the chat a question. If you are up, as Derek right here in the chat is up 400%, would you sell those calls or would you wait for even more? Would you sell those calls or would you wait for even more? Very curious what people think. Would you sell or would you wait for even more? Because I don't know, dude. I mean, AMC calls up 1,000%. Wow. I think if it's up 100 or 200%, it's time to take some profits, dude. It's time to take some profits. Look at AMC rising up a little bit right here, up 9.68%, up 85% right now. GameStop trying to get back into the 50s, up 70%. Faraday Future 110, Robinhood up 8.6. SunPower up 70%, Tupperware 22%, Plug Power 31%, BlackBerry 15%, Reddit 7.5%. GameStop trying to get back to $10. I guess we'll see how this story plays out with these two, but they're not getting halted anymore. So maybe they kind of stabilize at these prices. And then towards the end of the day, we'll see how they're playing out. Roaring Kitty tweeted. He tweeted, oh boy. Oh boy, oh boy, oh boy. It's like a movie, dude. It's literally like a movie. Oh my gosh, he tweeted. He tweeted. Okay, here we go. He tweeted another movie clip. Another movie clip by Roaring Kitty. Here we go.
Where is he?
Okay, I'm going to put the audio off, guys, because otherwise YouTube's going to copyright it, but we'll look at the clip right now. So this is from the movie Troy. I watched this back in 7th grade during Latin class. This is when he's going up against these guys. He's the guy who had the Achilles heel, kind of. That's where the saying comes from, the Achilles heel. It's halted again. Yeah, I turned the audio off, guys. YouTube's gonna copyright it if I keep it on. They're gonna be like, "Oh, you're playing clips from a movie." They're gonna be crazy about it. I watched it for Brad Pitt. That's correct. I did watch it for Brad Pitt. Okay, so you can see there's this war scene going on right now, and it basically kind of looks like he's saying we're gonna go to war. Wow. Oh my. Oh my. I think Roaring Kitty thinks of himself as Brad Pitt right here. Achilles versus Bulgarius. Yes. Watch your heels, huh? Achilles heel. Fighter versus fighter, taking on the big guy. Yeah. To determine who wins the battle. So it looks like he's back. What, he tweeted that at 11 a.m.? When did he tweet this? 11 a.m. It looks like we're going to get it every 30 minutes because the last time he posted the video also, it looks like he's scheduled for every 30 minutes. So look, last video he posted yesterday, the first one. The first video. Oh, wow. In 2021, I scrolled all the way back. He posted a lot of video clips. Wow. I didn't know this. I haven't scrolled back to June 2021. We're looking at June 2021. Apparently, I thought these movie clips were... So people were speculating that movie clips means it's AMC. But if you go back to June 2021, there's a ton of movie clips here. Which means I don't think the correlation for AMC makes that much sense anymore. So look, the first movie clip he posted yesterday was at 11 a.m. Today, he just posted at 11 a.m. And then he posted every 30 minutes. You see right here. Then we got 11:30, up until 4 p.m., up until market close. Then we got 12 p.m. So it looks like he's going to do the same thing here. And what's interesting is that he was posting movie clips back in 2021. So I don't think the movie clip thesis people have about AMC being the secret stock, I don't think that's correct anymore, because it doesn't seem like that's a unique reason why he's doing it. AMC and GameStop are halted again. Just when these suckers were getting some momentum, they get halted again. This is insanity, dude. This is insane. This is insane. Wild, wild, wild. Kelly says, I wonder why he's scheduling. Not very impactful with the scheduling. Yeah, I mean, I'm not sure why he's scheduling either. I don't understand the logic there. I also don't know why he's starting at 11 a.m. versus like at 9:30 when the market opens. Like, why 11 to 4? You know? But there's got to be something that he's putting out there or witnessing or trying to make a statement on. But that last clip that we just saw was from the movie from Troy. And it looks like he thinks of himself as the guy who's taken on the machine. And that's a way to rile up the troops, man. That's a way to rile up the troops. It definitely gets people excited. It's the time he wakes up. Where does he live? Doesn't he live in Massachusetts? Don't make fun of me for saying Massachusetts the way I say it. I have a lip thing. I can't say it right. I'm sorry. But I'm pretty sure he lives in Massachusetts. See, I'm not even going to say it anymore because I can't even fucking say the same thing. But he lives there. Let's see if CNBC is covering this by now. They've got to give us some coverage on this thing. Let's see. Again, PPI came in a little hotter than expected as well today, but markets seem not to care that much. Okay, let me pull this up while we're waiting for it to be halted. And we'll watch this. Just say Mass. It's Massachusetts. Just that last part, I also get messed up. Massachusetts. Dude, I'm not even making it up. I'm not even doing it to like be funny. Like I really can't say the fucking word. What time did he post in 2021? Oh, that's a good question. What time did he post in 2021? Was he doing these increments of 30 minutes? Let's see. Okay, so June 2021. Huh. He posted in increments. But these were 1 hour increments, not 30-minute increments. 1 hour increments. Wow. This guy is, dude. Okay. Have you guys seen, look, 12 p.m., then 11 a.m. This is June 2021. Then 1 p.m. Come on. These guys want to, these people want to see a show, and I don't want to be embarrassed. Look at this stuff, dude. This is so interesting how he's organizing this. Have you guys seen this documentary on Netflix called How to Find a Cat Killer? Or no. It's called Don't F with Cats. Don't F with Cats. If you guys haven't seen it, one of the best documentaries of all time, literally of all time. Roaring Kitty, GameStop back to being unhalted, up 73%. He's giving me Robin at 1850, 9.5% up. GameStop's running. He's giving me vibes of the guy inside of the film who is the main character for Don't F with Cats. If you guys have seen that. If you haven't seen that documentary, oh my God, you will binge it in 3 hours. It is so good. And it's such a mystery. And Roaring Kitty is kind of concocting this entire show the same way that the guy did in the Don't F with Cats film. And his name is Roaring Kitty, which also a little bit of similarity there in terms of the guy who was in the cat film. I'm not going to give away the documentary. I don't want to say too much about it because it's such a good documentary. I feel like everyone deserves to watch it and find out like in real time kind of how it plays out. But it is a hell of a documentary, and the story is insane. The way these people like used Facebook to like organize a group to come to the conclusion on who this guy is. It's similar to Roaring Kitty kind of putting out these hints, you know, that was the big thing in the documentary, that there was a lot of hints and almost like the guy in the documentary kind of wanted the chase. He if you've seen the movie Catch Me If You Can by Leo DiCaprio, that's also a phenomenal movie. He's like mirroring Leo in the movie of like wanted to be found. And it's almost like Roaring Kitty's kind of putting out these hints to kind of potentially want to be found or want to give out the truth to an extent as well. We got AMC back above $10, up 95%. GameStop up 80% at 54. GameStop's got to try to make a run back to 60 again. And we'll see if that can. Now Amit is the movie guy. Okay, dude. The only movies I've seen are what's his name? Christopher Nolan movies or Leo DiCaprio movies. It's embarrassing, but Dark Knight, Inception, Interstellar, Wolf of Wall Street, Catch Me If You Can. I've seen those movies. And some documentaries, but outside of that, I haven't. Like all these movie clips that Roaring Kitty's posting, I have no idea where they come from, dude. It's like, I'm just like, it's in over my head. That's why when Vlad asked me about Wes Anderson, I was just like, I have no idea what you're talking about, bro. I have no idea. Breaking news, CleanSpark pivots to meme stock. Is CleanSpark up? CleanSpark. Oh, wow, it's green. Is Bitcoin finally moving? Bitcoin. Stupid Bitcoin, dude. We thought Bitcoin would be the bull case this year. Nope. Bitcoin's at 61. The inflows yesterday were not the best. So I'm looking at them right now. Inflows were 0 across the board, including Grayscale. So Grayscale didn't sell. That was good. But Fidelity brought in 38 million, and then Bitwise brought in 20 million. And then HODL brought in 7 million. So we did have some inflows, and Grayscale didn't sell, which was a good thing as well. You don't know Wes Anderson? Are you trolling us? I know Wes Anderson, but I've never watched the Wes Anderson film. And so when Vlad asked me about that, I was just like, are you trying to embarrass me, my guy? Like, what's going on here, dude? But yeah, I haven't watched it. Robinhood 1854. Come on, Robinhood. Let's get to $19, dude. Let's get to $19. Let's get this show on the road. Look at my dad. My dad's calling me. My dad. You know what's so funny, guys? So my dad bought 100 shares of Robinhood because I've been talking about it a ton. He's like, you know what? I'm going to buy some Robinhood at like $16.20. And then last night, Robinhood was $7.25. And you know how Robinhood is the open market. I was like, Dad, I can buy you some more shares at $17.20. And he was like, no. It'll probably go back down below 17. Then we'll buy it then. And he's probably calling me right now because he's looking at Robinhood at 1850. I knew I should have bought my dad some shares last night. I was like, I don't think tomorrow, if GameStop keeps running, Robinhood's going to be stuck at 17. But I asked him, should I do it? And he said no. He said to wait. So I was like, all right, we'll wait. Because at the end of the day, he has to make the decision, right? I can only ask, but ultimately he has to decide. And now he's looking at Robinhood up 10%. He's probably like, damn it, I should have bought some shares, which is so hilarious, dude. It's like I'm getting closer to my dad because of the stock market, which is really cool. And we're like, we're getting to bond over these stocks. But it's really fun because he's like getting into the whole game. And he has a good average on Robinhood now at $16. So he's probably thinking he should have bought some more. Tesla, where's Tesla right now? Wow, Tesla's up 4%? Is Tesla going to become a meme stock? Is that what we have going on right now? Is Tesla going to become a meme stock? Amit, did you make your family degen? No, he has all of his Google, his Amazon, his Tesla. I even asked, do you want to sell Google to buy more Robinhood? And he said no. So he's kept the main portfolio, but he just put in $2,000 yesterday. And he was like, what do we do with this? And I was like, well, I think we have a better shot than SoFi. Also, I sold all my dad's SoFi today. He took like a $30 loss. We got rid of SoFi. So now we have a good $4,000 to play with in his portfolio. And we got to see what we do with that. So congrats. SoFi should go to like $8 now that I sold and my dad sold. But let's see. And again, I would be so happy. I'd be so happy if SoFi goes up because my sister has a ton of money in it. I would love to give her $30,000. Again, it would be her first win in the market if SoFi gets to $12. I'm just skeptical of SoFi, dude. I'm really skeptical. I think that guide after that earnings, unless the B2B side really picks up, there's like no real catalyst to get SoFi excited. And the price to book, it's valued fairly as a bank. So then where's the growth coming from? That's what I'm concerned about for SoFi. And maybe Anthony Noto announces some partnership and that helps and that's great. But so far that hasn't happened yet. Kelly says, am I supposed to sell my SoFi now? I mean, no, look, if you're holding for the long term, SoFi is going to be fine. But I wanted cash now. I did not want to keep cash stuck in SoFi that I could, especially in options that I could use in better places. So for me, I got rid of it. Does your sister have calls? Yeah, dude, I got my sister 200 calls and I sold 100 of them. So she's like, this is literally the house money, right? She's literally not even losing money on this. But I got it when SoFi was $4 for a $7 call. And so she already made $10,000. I gave it to her last summer. Like, let me just show you the thing right now. But if this sucker can get to $12, she's going to make $30,000, which is going to be fun. And so this is her call options, right? I bought it on my portfolio because I could do spreads for me. So she's up $9,000 on this. Is pure profit. and I sold 10,000's worth of it when SoFi was at like $12 back in the summer. And so here we go. If SoFi gets to $12, that's it. That's all I'm asking for. Look at that. She'll be up $28,000, dude. 27 grand. So all I need is $12. That's it. That's all I need. If SoFi even gets to $10, we'll probably sell by like December. She'll be up 15 grand, which is up another 7 grand from where it is right now. So, I mean, that's why I really do want SoFi to do well. But for me, my options were not got as great as a price as her. So I'd rather take that money and put it somewhere else right now. Rivian's up 6.3%. Tesla's up 4% on the day. SoFi 757. Robin at 1853, up almost 10% on the day. House money trade. Yeah, exactly. House money trade. Again, the problem, dude, and I was talking with Tanner about this. He said their tangible book value is $4. The stock's almost 50% above that right now. Almost, 70% above that at 758. So you got to be asking yourself, where's the multiple? Also, by the way, the other thing about SoFi that I don't like, the growth used to be at fucking what, 30, 40%? Now the growth's at 16%. So you got a bank that's growing at 16%. It's not as aggressive as JP Morgan or Bank of America. They're growing at like 7 or 8%, but still 16% is not like 40, 50% growth. And the tech side of the business is not growing as aggressively either. So what are we really buying SoFi for? That is my question. Are we buying it because it's a bank? Because if that's the case, there's a lot of other profitable banks. And so over the long term, I think SoFi is going to be fine. But in the short term, I don't know if the momentum is that exciting there. Tesla has been granted neural network for embedded devices patent. Okay, it seems like that's why Tesla's up right now. They've been granted a neural network for embedded devices patent. Okay, so that's why it seems like Tesla's up right now. Tesla might just be up also because the meme stock stuff, but Tesla's up 4.2%. PayPal's up 1%. CleanSpark up 0.64. SoFi 6.47. Palantir 2183. Palantir was at 2190. Also, I think, guys, I'm going to post the podcast today with Sham Sankar. So we'll post that probably at like 5 p.m. on YouTube. So watch out for that. That'll be a fun podcast with Sham. And that'll be out today as well. What are your views on Path? I don't like Path that much. Like Path is interesting. Robotic processing automation is an interesting technology. But at the end of the day, I don't see that as like some revolutionary game-changing tech that's going to like change the world. It's good. It's interesting. It's probably for small businesses that can't afford something like Palantir, but it's never been super exciting to me. So Path, I think, topped out at $90. Yeah, $90 back in 2021, bottomed at $10. Now it's at $20. Again, I just don't know what's the exciting thing to buy when it comes to Path. I also don't know if the valuation is that attractive either. Are they profitable? Is Path profitable? Let's see. Path is not profitable. They are losing 80. They're getting close to profitability. $90 million down. Revenue, they did 1.3 billion. They did 1 billion in 2023, 1.3 billion so far in 2024. So revenue growth is great at 31%. But just not sure what the long-term sort of thesis or moat is when it comes to Path. Robin at 1854, SoFi 757, Palantir 2188. Let's go back to GameStop and AMC. GameStop 52, AMC 974. Okay, so those guys are still up right now. Tesla over 179. Yeah, Tesla's going higher. I'm trying to figure out what AMC and GameStop look like in the next couple hours, because now they're not getting halted anymore. So the market's kind of letting them operate, which means the orders aren't as aggressive to the upside or the downside, which is why the volatility is slowing down. But does that mean we're normalizing at $52? And here's here's the crazy part of 2024 if this plays out. Imagine GameStop normalizes, let's call it at $70, and it stays there and it never falls off. Like, let's say that like people don't sell and it actually maintains its gains for the rest of the year. First of all, that's going to be great for Robinhood. That's going to be huge for Robinhood, their assets under custody. But number two, that's going to mean we have a new paradigm, because the GameStop thing, because of the buy button saga, it sold off within 7 months from January. I mean, let's just look at the chart. So we topped out at 120 in January, and by October, we were at $30 of 2021, December. So still $30 is a 30x from the $1 people bought it at, but it went down basically 70, 80% from the top. Now we got this resurgence of the green candle here at 64, up from $9. So people are up 6x basically if you bought at the lows. The question is, how long does that last? My dad is still calling me. He's okay. Let me call my dad. He's probably. I'll put him on speaker. He probably wants to. Hey, Dad.
Are you all right?
Yeah, I'm good. I'm on the stream right now. You're on speakerphone, okay? Everyone can hear you.
Okay, all right. I want to just know what's happening. You're okay or not?
Yeah, I'm good. Are you looking at Robinhood right now?
Yeah, I'm looking up. What happened to the SoFi? Why did you sell SoFi? Did it keep moving?
Yeah, because it's up 6%, and I think this is a good opportunity for us to get out of it because it shouldn't be up 6%. So it's a big story, Dad, but there's a lot of stocks that are running up today for no reason. And a lot of these stocks are running up basically because of some guy who tweeted a picture. It's like a long story, but that's why SoFi is up. SoFi shouldn't be up 6%. It's up because people are, just buying it to buy.
But I understand you sell the stocks, but why did you sell the options?
No, I didn't sell the options. The options are there.
Options still there. Okay.
Yeah.
All right.
Yeah.
Okay.
All right. I'll talk to you later. All right. Bye.
Okay, bye.
So we have $10 calls on SoFi. My dad wants to get a win in options, so he really wants those options to do well. No, my dad told me to sell SoFi last night, guys. He was like, we got to sell SoFi when it pops up. And so, but the thing about my dad is when something starts moving, my dad is very like, my dad is indecisive. Okay. That's the problem with my dad. And that's why he needs me to help him manage. Like my dad can't really make decisions that well. Just in life, he's been a more indecisive person, right? He has a lot of OCD that kind of hurts him. So when he sees a stock running, he'll be like, okay, we got to hold it. When he sees it falling, like he's been telling me to sell SoFi at $6.80, literally for the past month. And I'm like, Dad, we don't need to sell SoFi at 680. It's going to come back, right? Like it's stupid to sell it at 680. But then when it runs up, he's like, oh, it's going to go to the moon, so we can't sell it, right? He has that type of mentality, and I can't blame him, dude. Like he's 65 years old. He just got into the markets, and he's just trying to like navigate this stuff. But today, and we'll see if it's a good sell or not, but today I don't think SoFi deserves to be up 7%. Like today, the move like this today is nothing fundamental. There's no news that came out about SoFi. It's going up because it's heavily shorted, and maybe, people are correlating it with it being up. So I'd rather take that $3,000 from SoFi that he has, and we'd probably deploy it somewhere else that's a lot better versus leaving it stuck in SoFi, because the odds are this thing comes right back down to $7. Will it happen? Who knows? If it doesn't happen, it doesn't happen. That's why he has his options. His options are still there. And if SoFi keeps running up. So that's actually the good thing about buying options in stock. When you buy long dated leaps, you don't need really to have a share position, because if the thing runs up, if you got the leaps at a good price, and he got the leaps at a relatively good price, they'll continue to go higher. But you don't really need the stock, right? Because the stock, you're going to get some alpha there, but the leaps are going to create a lot more alpha. So Thomas says that's basically how every adult's 50 initial market mindset. Yeah, that's pretty much how people think. So at 680, he was like, we got to sell SoFi. And I'm like, no, because he thinks SoFi is going to go to $5. And I'm like, no, that's probably not going to happen, right? And that's how I thought 3 years ago. But obviously, I've gotten a little bit smarter about how the markets work. And so now if the market's giving us some liquidity at 757 and he can get out making, break even or even losing a couple dollars, I think it's a good day to take it. The question is, will SoFi continue running? And I don't know, but I don't want to be stuck in SoFi. I think there's a lot of better opportunities there than SoFi right now. And so we'll see. Now, SoFi should have been up for its earnings. That is a delay of reaction. I don't know anymore, dude, as I go into their earnings. I want to agree with you, but I don't know if SoFi should even have been getting higher because of their earnings, dude. I don't know. I mean, at the end of the day, if Galileo and Technisys are not growing, this is an overvalued bank. And that's not me saying it. That's Tanner saying that it was valued. Its tangible book value is $4. Banks don't trade that much higher above their tangible book value. So I don't know, dude. Here's the other. I was with Arnie over the weekend. Arnie and me were talking a lot about SoFi versus Robinhood, because Arnie took a lot of shit on Twitter when he was saying Robinhood is better than SoFi. I mean, he took a lot of shit for that, in like the summer. And we were going through it over the weekend. He was like, and he used to be a banking analyst, and he basically was showing me all these charts, and he was just like, dude, banks suck compared to brokerages. Banks have all these requirements and things they need to do. Brokerages, they basically function as a bank, and they don't have any of the downside that a bank has. And so he was just like, I don't understand why people are so excited over SoFi when it's trying to become what Robinhood is, but it has to deal with all these banking regulations. Their deposits are shit compared to Robinhood. So it's like, what's the excitement here that's so excited? The only excitement, and this is what I called Steve about 2 weeks ago before earnings, is the B2B banking AWS of fintech play. But if that's not growing, AMC right now at 966, GameStop at 52. then I don't know what's the value there, man. I don't know what's the value there. And that's the problem. So that's I guess that's how we're navigating right now. So we got rid of some of the SoFi stock. We have some of the SoFi options, and now we got to see where we deploy it in other areas. I don't even know how to explain to my dad this whole meme stock mania thing that's going on. Like I already tried to explain him Bitcoin, and he didn't really understand it. So it's hard to explain this stuff to him, but he just sees stocks go up and stocks go down, and he reacts based on that. But in this environment, if the meme stocks are running, the main beneficiary is going to be Robinhood, and I'd rather have more capital to deploy there. I don't know if SoFi can be a beneficiary of this if the street or if the apes are like, oh, it's 19% short, we got to buy it. If that's not what happens, then I don't know what the catalyst is for SoFi. But if the short flows is a catalyst, then maybe that's a reason it goes higher. Plus, doesn't have SoFi have all the issues with college debt? Yeah, SoFi has delinquency issues, essentially. Now, those issues aren't massive, but management didn't really say a lot about it on the call. And it kind of made people feel like they were not hiding stuff, but not really disclosing as much as they used to disclose in regards to delinquencies and defaults. And it's just not exciting. That's the problem. It's just not exciting right now, and there's a lot more issues on it to deal with. Let your dad watch Dumb Money. Yeah, we got to show him Dumb Money. That would be exciting for him to watch. He would get a better understanding of this. Thoughts on Shopify? I like Shopify, but is it down today? It's down 2%. Yeah, Shopify, I don't know why the street hates it, but I think they hate it because of the valuation. I was looking at a chart that it trades at like 69 times forward earnings. And compared to all the other not meme stocks, compared to all the other e-commerce stocks, like Etsy, which is at 10 times, you could say Shopify is ridiculously overvalued. But they tanked this boy 20%. Dude, look at this. Went from 79 to 56. I mean, just insane. And their numbers were not that bad, I think, in my opinion, to get this level. But it's like an 80 price to free cash flow. Yeah, that's another part. The price to free cash flow is not the best for Shopify. Also, they sold off this like delivery part of the business, logistics part of the business. And the street's kind of just like, what the hell are you guys doing? Like, you guys, like, are you building a competitor to Amazon FBA? Are you not? Like, what's going on? Robinhood 1843. But granted, Shopify, I think, is basically a monopoly when it comes to small businesses using e-commerce. It's them, Wix, Squarespace, Amazon, but Shopify is like the real one that's like a winner. So we'll see. We'll see how it plays out for Shopify. But I don't know if the dip is the easiest to buy on Shopify right now, given the street's appetite towards it. So I would be skeptical of getting super excited to buy the dip. Tesla 178, but selling some puts on it at like $50, $55, probably not the worst idea. Because I mean, it's fallen 25%. Like, you got to ask yourself, how much lower can it go? Now, granted, if CPI comes in hot, everything's going down tomorrow, and I guess we'll see how that plays out. Rivian 1153. It should be like $40. I've heard about that as well. Fair value for Shopify is closer to $40. But we'll see. I don't know if it gets to 40. That's a pretty aggressive decline. Kathy Wood also has a ton of Shopify. Where's ARK? How's ARK doing? ARK Innovation. Oh wow, ARK's up today. ARK's up 4%, probably because of Robinhood and Tesla. Dude, it's so crazy Kathy sold so much Robinhood because, like, that shit is carrying her fucking portfolio, dude. She still has like 16 million shares, but she sold 2 million shares. And I'm like, she sold it right before the gold event too. And I was like, why are you selling right before like their biggest event of the year? I think she sold at like 16 or 17. So there is, maybe she got one sale at 19, which is probably a good sell, but there's a lot of momentum. Robinhood and Tesla are literally carrying the ARK portfolio. And I guess Coinbase, but I don't know if her average on Coinbase is that good. Coinbase here at 205 right now. Thomas says, IDK, why people are paying crazy multiples for 20% growth. Never gonna understand it. That's a good point. Shopify's only growing 23%. I mean, it's a good point. The multiples being paid for that probably aren't justified to an extent. I remember you saying SoFi is an easy double a year or two ago at $7. Yes, I did indeed say that. And unfortunately, things have changed. Now, remember, the reason I said that and the reason a lot of people felt that, if you can go back and watch those videos, is that the tech side of the business was growing aggressively. Galileo and Technisys. That is why, if you watch my first video ever on this channel, like why I'm buying SoFi, type it in, why SoFi, emit stock or whatever, you'll probably find some video like that. I said my big thesis was this AWS of fintech makes it a tech company that has a consumer banking part to it that makes it exciting. A year later, the tech side of the business is almost non-existent. And the consumer banking side of the business is not that exciting. And so the thesis changed when the tech side of the business stopped becoming as big of a deal. And if Noto could just announce, instead of a request for a proposal, an RFP, an actual deal with one of these big banks, Citi, JP Morgan, whatever, that is using SoFi's backend, then I think the stock would pump on that news and it would be exciting. But the problem is, I don't know if those deals are real, which is why they haven't announced anything. And that's why the stock's kind of been stuck in the gutter. On had good earnings today. Yes, we discussed that. They had great earnings. Are they up still 15% on? Yeah, they're up 16%. On had good earnings. They're up. SoFi 757, Robinhood 1837, Tesla 178, Path 2041, CleanSpark 1578, PayPal 6473 on the day, Rivian 1157 as well. No problem buying Shopify right now. Palantir's only growing 20% and happy to buy that one. Yeah, I mean, that's fair. Palantir's only growing 20% as well. I guess the question becomes the moats then between Palantir and Shopify. Palantir trying to get to $22 right now, 5 cents away. I think Palantir has a larger moat than Shopify. Now, the thing is, Shopify is probably a bigger TAM, you could argue, just because it's e-commerce, and commerce in general is a huge TAM. But if you believe in sort of the AI narrative with Palantir, you could say that their TAM's even bigger. So I think both aren't horrible buys. But I also think that you are paying a premium for Shopify even after the 20% drop. Now, granted, the way the stock market works, when something drops 20%, it's a bit harder for that to go down another 20%, especially if it's a really good company like Shopify, which is a phenomenal company. Toby Luke, Harley Finkelstein, these guys know what the hell they're doing. Same thing with Palantir. People want Palantir at 15. It's already down 20%. It's hard to get this thing down another 20% when you have Alex Karp and Shyam Sankar leading the way. So you might end up having to pay a little bit more of a premium. Doesn't ARK have SoFi? Yes, ARK does have SoFi, but she hasn't been buying also. That's weird. ARK hasn't bought in like a month, and SoFi's tanked, to the 680s, and she hasn't been buying. So that's also a bit weird that she hasn't deployed capital there as well. Did Roaring Kitty tweet? Oh, wow, 11:30. Literally, he should be tweeting right now, right? He should be tweeting right. Oh, there you go. We got the tweet. We got the tweet. Here we go. Roaring Kitty. We got the tweet. This is insanity, dude. This is insanity. Here we go. Here's the tweet.
Don't be the bigger person today. Be the person that helps them understand that sometimes when you fuck around, you find out.
Whoa, Buster. Look who's got something to say.
I'm Mom, and I want to shoot down everything you say so I feel good about myself.
Look who's ragging on the old lady. Hey.
Finally, because I'm an uptight Buster. You old horny slut.
Well, no one's going to top that. Don't be the bigger person today. Be the.
We have to be living in a simulation, dude. We have to be living in a simulation. There's no way. There's no way. There is no way. There is no way. There's no way. There's no way. This is insane, dude. This is insane. This is insane. We're going to watch it one more time, then we'll move on. This is insane.
The person that helps them understand that sometimes when you fuck around, you find out.
Whoa, Buster. Look who's got something to say.
I'm Mom, and I want to shoot down everything you say so I feel good about myself.
Look who's ragging on the old lady. Hey.
Finally, because I'm an uptight Buster. You old horny slut.
Well, no one's going to top that.
This is insanity, dude. This is insanity. This is legit insanity. Like, I cannot believe this shit, dude. This is like, I can't believe it, dude. I literally can't believe it. This is insane, dude. This has got to be insane. Like, how's this? Like, he's literally being the Riddler right now, and I like it's. This is a movie happening in front of our eyes. Where's GameStop right now? Goodness gracious, GameStop's up still 68%. Volume on GameStop 106 million shares. AMC volume 312 million shares, up 83%. Robinhood 1840. Beyond Meat 979, Tupperware up 23%, Reddit 63, DJT 5%. This has got to be insane, dude. I mean, like, and all of these memes are going to eventually make sense. I'm assuming he's going to come out eventually and kind of say what he's trying to do. Jim Cramer just said, bless Robinhood for keeping the casino open at all hours for this massive game of chicken that the companies can't complain about and the SEC doesn't seem to care about. So game on AMC and GameStop. I feel like Cramer's upset because he was bearish on Robinhood at $10, if you guys remember. And that's because his show is sponsored by Schwab Trading. So, of course, like, it was so funny. Literally, the sponsor was behind him, and he was saying, I don't like Robinhood. It's for gamblers. And the sponsor behind him is presented by Schwab. So you kind of think he's a little bit conflicted there. But, dude, regardless, Robinhood is the outlet for people to access these equities. And even if they're gambling right now, they're going to grow on the platform, even if it's only 5 or 10% of them that join. And that's going to create massive users for Robinhood. Also, Robinhood has 7 billion assets under custody in retirement. So they're helping you save for the end of your life, right? Like, this company's fundamentally transformed. And I think they're going to benefit a lot from this. And also, it's always great when Cramer's bearish. It's always great on that. Insane. Absolutely insane. This is crazy, dude. I'm prepared to go to the mattresses on my GME puts. Yeah, Sean, you got to be down on those puts today, right? Because Sean got some $5 2026 puts yesterday. Oh, boy, man. Oh, boy, oh, boy. Maybe it does come back to $5, but at this point, this GameStop would have to collapse dramatically, $51 in 2 years. Now, the thing is, it collapsed within 7 months last time it ran. That's what I'm the most curious about. How long can this continue? Because if this lasts the rest of the year, 2024 is going to be fun. 2024 is going to be very fun. If this dies out in a couple of weeks, then, like, it was a little fun moment. But if this gets us through the summer, along with good inflation data, and NVIDIA crushes next week, and, you know, AWS and Azure and GCP and the cloud computers, they don't stop, and Apple actually releases a dope phone, GPT-5 comes out. I mean, you got Robinhood's 3% credit card finally going live, 1% instant match on deposit. You got so much stuff happening. This could be an exciting end of 2024. How much money so far has Roaring Kitty made? I see. Here's the thing. Is Roaring Kitty even doing it for the money, or is he doing it for the fun? You know, imagine the most hilarious thing would be he's doing this whole thing, riling up everyone, and he's making everybody else money. But he discloses one day he doesn't even have a position because he already made his money on the last run. And now he's just trying to, like, fuck with everybody, which is kind of what people do sometimes, right? I don't know. Now, granted, he probably is making some money. There's no way he's not doing this without money. But if he's not doing it for money, it would be really interesting to see how he's navigating this. Okay, let's watch the Vlad clip. I didn't get to show it because we had Jpow talk. Here's me asking Vlad about GameStop for those that haven't seen it. And Vlad's going to have to make sure that he doesn't mess up this time, because as much as I love Robinhood, if they take away the buy button or any shady shit happens, it will be the death of Robinhood. Let me just say that right now. Like, they will never recover from that. So they need to make sure this shit doesn't happen again. Let's see how he's thinking about this back when I asked him a month ago.
And obviously a wild time for the company. After everything that has happened, I still see, I would say 3% out of the 97% of positivity people have towards Robinhood. There's 3% that have a negative affinity for the brand. And the things they say is, I will never use this product. I don't trust Robinhood. And there is nothing they can do to get me back. What they did was horrible. I can't deal with them. Those people are going to be watching this. What is your response to those people in terms of how they thought of what happened and what you're going to do to try to get them onto the platform?
Yeah, I mean, first of all, I completely understand why people would have this impression that, you know, we were colluding with hedge funds and market makers and, you know, holding down the trading. I mean, I was kind of following this whole story as an observer before Robinhood was very much in the middle with the trading restrictions. Yeah, I mean, if you kind of have to think about my motivations as a business person, not just a human that loves trading and free access to markets, of course, if it was possible to allow people to trade unrestricted, that's what I would have wanted to do. I mean, everything about the Robinhood brand and our business model and the revenues and how much our customers use us and care about us. The bedrock of that is customers trusting us and our intentions. So I think it was really unfortunate that we weren't able to communicate as effectively as we could have to kind of stop the misinformation narrative around the collusion. And I think it still pervades to this day. People are just convinced that, you know, we were colluding with hedge funds to somehow suppress this.
Certain movies don't really help the narrative.
Right. They kind of allude to it. Right. Yeah. And I do replay that and think, okay, like, could I have said some magic words or communicated a little bit better so that we could clearly articulate what was going on?
So what would you say to those people to come back to the platform?
I mean, I think that also the unfortunate thing is, since so much of this was made possible by Robinhood, and Robinhood was kind of the platform that everyone was downloading, even though other brokers did the same exact thing because they had the same issues, we sort of got the lion's share of the attention. And I think that's kind of the price of market leadership to a certain extent. You're kind of the Robinhood became sort of like the personification of the failure of U.S. equities markets to work that day, even though it was bigger than Robinhood. What I'd say is hopefully the real story of what exactly happened and the fact that it was a collateral issue is a little bit complicated to understand, and I can understand why people wouldn't want to get into the details behind it. But I think that could be better explained to customers. And other than that, what I'm focusing on is making the service as reliable as possible. The balance sheet has been strengthened, which will hopefully give customers the comfort that if we were in a similar scenario with high volatility in
We're here, baby. We are back. 2 months after this interview, we are back to that scenario.
Stocks, that we would handle it much better. And otherwise, just keep shipping amazing products and let the value speak for itself. If we keep improving the user experience, giving people more value, then, you know, eventually I think they'll start to understand that, and more mileage and more time spent making progress and kind of.
All right. So basically he said, we can't fuck up again. I mean, that's those 2 minutes condensed down to we can't fuck up again. And yes, they can't fuck up again. If they fuck up again, it's going to be bad. Hopefully they don't fuck up again. GameStop here, 49.30 up 62%, AMC 74%, Robinhood 18.45. So I found out why SoFi is pumping today. We got a partnership by SoFi. Let me know what you guys think about this. It's not, I mean, I don't know what to make sense of this, but SoFi and Templum partner for expanded access to alternative assets. Templum is working with SoFi to grant everyday investors access to alternative investment opportunities historically reserved for the ultra wealthy. So SoFi, the company that doesn't even have level 2 options, is saying, hey, you can invest in alternative assets. Am I alone that thinks this is the dumbest shit ever? Like, SoFi can barely let you buy options on their platform. And today, Anthony Noto says, unfortunately, many valuable investment vehicles have been left inaccessible to the everyday investor. Dude, it's shit like this that leads me to not trust this company, dude. Why are they focused on this shit? Who cares about investing in a Pablo Picasso? Like the people that are on SoFi are just, you know, starting to generate wealth, you know, $150,000 in income. They don't have money to put into an art piece or like a fractional piece of art. Like, what is this, dude? What type of announcement is this? This is ridiculous to me. Partnering with SoFi is a great example of how like-minded firms can come together. Templum's technology, regulatory foundation, alternative expertise combine. Like, why would you want to invest in alternative assets if you are not worth at least $10 million? If you're worth less than $1 million, which is many of the people on SoFi, do you even have the disposable income to put into a piece of art or an alternative asset? Basically a mature version of an NFT. I don't do that. That's not exciting to me at all. AMC now halted, up 67%, GameStop 48%.
And see, that's the issue I have with SoFi. Instead of focusing on shit that matters, they're focused on this useless stuff, you know? And did they have this deal for Steve single-handedly? Probably, dude. Again, I don't want to seem like I'm a bear on SoFi. I want the stock to go up. I want it to do well. Got my sister's money in it. If it goes up, it'll be great for her. But it's stuff like that that just leaves me skeptical of like, what are you doing, dude? Like, what product announcement has SoFi come up with in the past 5 months that's relevant for people that use SoFi? No one's investing in alternative assets. Like, no one gives. First of all, the market's booming right now. Why would you even like? The market's doing great. Why would you need to invest in alternative assets? Like, there's so many opportunities in the market that people already can be engaging with. So here's Templum's website. Let's just go to this real quick. They implemented Zelle. Okay, that's good. They got Zelle. It took them long enough to put in Zelle. What is this? What are we investing in? About Us Solutions. Templum is in. I want to know what type of stuff can you invest in here? What can you actually invest in? I'm like curious. What Templum private markets alternatives are among growing asset classes, yet investment opportunities have been limited for the ultra wealthy. This is like one of those VC investment ETFs that are like, hey, you can get access to SpaceX if you invest with us. Meanwhile, their net assets, their NAV is trading at like a 30x premium. Yeah, dude, this is a nothing burger. This is stupid. This makes no sense. If this is the reason SoFi's up 6%, then this is not a reason for it to be pumping up, dude. If alternative assets is the reason why SoFi's up 6% today, SoFi 755, and that's nothing. SoFi needs to announce a big agreement with a large bank. They do that, the stock shoots up to $9-10 bucks. Until they do that, it's tough. Alternative investments are illiquid style holdings. Yup. Like, are you really going to throw your money into something that you probably can't get liquid for a while as well? I don't know, dude. Doesn't make sense to me. Noto will not be appearing in interviews. You know what? The funny thing is Noto's not appearing with interviews with me. And unfortunately, this guy's not even giving Tanner a chance. I mean, a lot of people are saying, big CEOs should only talk with retail after their stock pumps. I tend to agree with that. Like, don't talk to retail because it's definitely a bad look on the market when your stock's in the gutter. The problem is usually your stock is in the gutter, a la AMC back when he was doing interviews with Trades 2 years ago, because the company is sucks. If your company is thriving, like a SoFi says they are, you should be talking to retail versus Jim Cramer, because a majority of your float is retail. So why would you not talk to Tanner or Data Driven Investing or Tevis or Steve or these guys? So them not talking to retail to me is actually a red flag more than talking to retail would be a red flag, because if the company's executing and they know the stock's undervalued, they're not going on Tanner's show to pump their stock. They're going to reach a better audience. Whereas going to Cramer, to me, leads me to not trust them as much, to be honest. David Beck, as Ramu says in the chat, the CEO of Rocket Lab, he thinks his company is deeply undervalued. He went on YouTube the other day with my boy Vince and Matt, and he had a 30-minute conversation with them. And I watched that interview. I don't think he was trying to pump. I don't think he was trying to like oversell a stock. Rocket Lab up 7% right now. He gave a pretty good technical interview about what Rocket Lab does in space and the difference between them and SpaceX. It was a very mature interview, quite frankly. You're telling me Noto can't get on Tanner's channel for an hour and talk about why SoFi is like, an amazing company that's growing? I don't like it. Even when we were on SoFi Weekly, we reached out to them a while ago and they said, no, you guys talk about the stock too much. And I was like, are you guys fucking kidding me? Jim Cramer literally says buy, or sell. You're willing to talk to him about the stock, but you won't talk to retail about the stock. I don't know, dude. I mean, like that, it's not a good sign to me. It's just not a good sign at all. Bet if you said Palantir was partnering with it, Amit, you would be saying it's great. No, I wouldn't. You don't know me then, SJ. Palantir, like, first of all, Palantir already did a partnership with Beck's Collectibles. Do you guys remember this shit? They did this a while ago, and when I did the video on it, I was like, this is cool, but like, it's not a big deal. Like, no one cares about Foundry or Ontology for collectibles. Like, they need to be partnering with BP. They need to be partnering with Airbus. Yeah, Beckett Collectibles. This was the deal back in August of 2022. I said back then, it's a cool deal, but it's not that exciting. It is what it is. Look, they were talking about NFTs. Look at this. This is bullshit. Foundry will serve as the back-end management for all collectibles of Beckett, from physical cards to NFTs. No one cares about this, dude. No one gives a shit. Foundry for crypto. No one gives a shit. I can be pretty objective when the stocks I like announce partnerships that are nothing burger. Fortunately, Robinhood, every product announcement they've done this year has been a something burger. It's been a pretty big something burger. Palantir has produced a lot of something burgers this year. But SoFi, this announcement is just not a big deal in my opinion. It's a stupid partnership in my opinion because they should be working on getting options on the platform so people can trade versus in the one-stop financial shop that they're trying to make it versus buy a Pablo Picasso, you know? Anyway, rant's over, but that's how I feel about SoFi. If SoFi hadn't partnered with Templum today, SoFi would be up at 850. That would be funny. That would be funny if SoFi would be up higher if they didn't have a partnership. Okay, we're gonna get the Roaring Kitty tweet in a little bit. I think I'll end the stream at 12, guys. I'll end the stream at 12 off of the last Roaring Kitty tweet. So we get a Roaring Kitty tweet at 12, and then I'll end the tweet. Look at what Sean says. I have my alternative asset certification. No one should be playing here. I didn't even know you needed an alternative asset certification to invest in alternative assets. So yeah, I think retail probably doesn't need to be messing around there. And there's probably not a lot of money and opportunities to be made in alternative assets unless you know what you're doing. Interesting. I was a holder of Palantir and was concerned it was a meme, but not anymore. Yep, I think Palantir has changed from being a meme 100%. Oracle is going to drive sales for Palantir. Yeah, I met the Oracle dude. I met a guy named David who used to work at Oracle at the conference. And I asked him, I was like, yo, no bullshit. Is this a big deal? And he was just like, dude, this is a big fucking deal. He was like, I don't know if it's going to massively increase their sales, but he said the potential for them to increase their growth is pretty gigantic, given the partnership and given that Oracle doesn't do a lot of partnerships like this. So that's what he said as well. Let's get some coverage as well on GameStop and what's going on. Here's Yahoo Finance. Let's see what they have to say about this as well. And then we'll end off the stream on the Roaring Kitty tweet at 12 p.m.
Roaring Kitty, as we've been talking about bringing the meme trade back too, as much, I mean, you heard us just talking about it. What kind of activity and chatter are you seeing today?
It's kind of, yeah, of course I'm having fun, but it's all the chatter we're hearing today. I mean, there really isn't much else. So it's been a slow week. You know, I mean, last week was pretty slow. So this week, everybody came in all perked up and yeah, it's kind of dominating the story time.
Do you see, Tom, you know, is this kind of a broader sign of just risk appetite ramping right now to you? And if so, do you see that kind of playing out in different data points? Do you see that in the options market?
Well, for sure. I think that there was a real lack of new ideas. There was a real lack of kind of, you know, there was a lot of complacency in the markets. And like I said, the last 2 weeks were kind of slow and this rally has been kind of a grind to the upside and Vol's been crashing. So I think that, you know, this move today was really welcomed by, especially by option traders, but also by kind of everybody, just as another level of excitement. I don't look at this at all like I did in 2021 when it was almost a transformational moment, dragging, you know, tens of millions of people back into the marketplace. That's not what we're seeing today. This is just, you know, this is all the players just kind of transitioning or moving into something that's actually active. This is kind of like the old days on the trading floor when there was a lot of noise in one pit. Everybody would run to that pit. That's what we're seeing today.
Well, Tom, there was another aspect of this whole phenomenon in 2021, which was like the narrative of the little guys trying to stick it to the big guy, right? Trying to stick it to hedge funds. And of course, we know Gabe Plotkin got caught up in that and there was a big short squeeze. What's fascinating to me is that there's still a short squeeze. The 24% of the company's float was still shorted going into today. According to S3 Partners, we're looking at $936 million in mark-to-market losses as of earlier today in a single day. Like, it's so interesting to me that there were still that many people shorting this stock kind of quietly in the background.
I don't know. Well, first of all, the float is the float's a lot bigger than it was, 3 years ago. And so that is there's been a couple of splits. There's been, a lot of stock that's been issued. So it's a very different situation. And you also have to remember that those numbers are really misleading because there are huge index fund positions right now. And on the short side of the index funds, because interest rates have been popping up, there's a lot of short stock out there that is just tied into different index arbitrage positions. And, GameStop's one of the bigger, Russell 2000 stocks. And so you're really talking about a lot of that number is mixed in with just, huge ARB positions, and they don't really necessarily, they're not going after GameStop, for example. They're just shorting the index because it's an ARB play.
And Tom, who's in GameStop right now? Is that retail, institution, both?
Well, I would have to think that there's some institutional and some prop speculators, but I also think today you're seeing, so what happens when you have a move like what you're seeing today is that a lot of the high frequency firms, after they learn their lesson in 2021, they try to get ahead of it. So a lot of the volume is high frequency firms and market making firms that know that there's going to be customers coming in on the buy side. So they're just trying to get in front of it so that they have some inventory to lay out. So I think that's part of it. And that's part of the excitement. That's part of the huge volume. But I would say that this is a lot more retail. And when we say retail now, it's kind of a mix, but retail is very customer. And I would say that today there's been a lot of customer interest, especially like just in our own office. I'm seeing it, people are talking, and a lot of, people that just work here, they're buying some GameStop, they're buying some AMC, they're just toying around with them. It's mostly just kind of, it feels like play money, but I feel like we're seeing more of that than we've seen in a long time.
Okay, let's get back to some of these equities. We'll end it in 6 minutes, guys, on the last Roaring Kitty tweet. I can't believe we're literally timing his tweets. That's insane. SoFi still 757, up 6.5%. Robin at 1848, up 9% on the day. GameStop 66%. So it's not at 67 anymore. Got some red candles there. Still at 66, but still doing its thing. Palantir crossing over 22. Really nice to see Palantir getting some momentum here. $22.06, up 5.3% on the day. Likely, I think maybe 50% of this is just markets buying the dip. The other 50% is it's being classified as a meme stock a little bit. I think SoFi and Palantir are both a little bit getting some of the meme action here. SoFi was a Chamath stock. Palantir went to $45 last time in 2021. So they both got caught up in this last time. I don't know if they get caught up as aggressively this time. But GameStop right here still up 66%. SoFi and Palantir getting some momentum. Rocket Lab as well, up 7% of the day, which is really nice for Rocket Lab because it got beat up after earnings. Coinbase up 4%. Arc Innovation up 3.6%. Tesla 178, 3.93%. CleanSpark up 3%. And then PayPal here up 1.2% on the day. Imagine losing billions twice on the same name from the same crowd. That is kind of crazy. That is kind of crazy. Molov said there was a high anonymous estimate that came in and that changed the surprise factor for the algos, and Palantir didn't rise because of it. I'm not sure if that's the case. I mean, the estimate for earnings for Palantir was 615, unless the estimates changed last minute. AMC up 70%, and they came in at 634 million. Maybe that could have algorithmically messed with the stock. That's very possible. But from my consensus estimates that I saw on Bloomberg was 615, and they beat on that pretty nicely. So that was good for them as well. Tyler says, one point about SoFi, pretty high short interest. That could be driving it a slight squeeze. Yes, I do think SoFi is a candidate to get squeezed. The question is, are enough people interested in SoFi as a company, right? And that we know that's true, but are the apes interested in SoFi as a company? And if they're not, I don't know if the squeeze happens, but if it gets a hold of Wall Street bets, then yes, SoFi is going to squeeze. I just don't know if that's going to happen. We'll see if it plays out. Sagar, thank you for being here. Appreciate you being here in the chat. Thank you everybody for being here. Are you going to stream the Google event? I'm probably not. I have like a trillion things to do that I haven't done today because I've been live for 3 hours. Like I actually have other stuff I have to finish. I was supposed to finish yesterday, but yesterday I fell asleep because I barely slept last week. So I need to actually do some work. And I'm not going to be streaming the Google event today. Now, granted, I think they're just going to create updates to Gemini, so it shouldn't be that crazy. But it will be exciting to see. Hopefully they announce something interesting for Gemini as well. I think we're going to see a big run with small caps from speculation. I think it's very possible. I mean, IWM right now, again, this is Tom Lee's thesis. IWM, look at that, up another % today. The problem with IWM is that it shouldn't be running unless we get rate cuts. And unless inflation comes in lower, the rate cuts aren't coming. So IWM could be, one could argue, running for no reason. But if the market feels that inflation's coming down, then that'll be the case. Now, another reason it could be running is because the market's trying to diversify because they think meme stocks, which tend to be small caps, are running. And, maybe IWM is a correlated ETF that runs with it. And that could be another reason people are piling in. The meme stock thing messes up a ton of kind of traditional market dynamics, because now people have to factor in, how does GameStop and AMC, and then as a result, Tupperware, SunPower, Hollow, Virgin Galactic, Beyond Meat, etc., Faraday Future up 164%. How does that factor in to everything that's going on? And unless there's a real sort of understanding of that, it's hard to figure out what's going to end up happening. Oh boy, 2 minutes, and then I'll get you guys out of here. We're waiting for Roaring Kitty's next tweet. Isn't this hilarious, dude? We're waiting for Roaring Kitty's next tweet to end the stream. This has got to be insane, dude. This has got to be insane. Roaring Kitty now 1 million followers, 1,051,000. He's added basically 500,000 in 48 hours, and we're waiting for his tweet. This has got to be great. I just hope this thing continues for the coming months, because it's fun. It's going to help markets, and we potentially get a 2021 2.0. And a lot of people that probably shouldn't be making money in the markets, at least that's how the hedge funds think of it, they're going to make a lot of money. Also, the question is, well, if the hedge funds cover their shorts, I wonder, if there's even enough squeeze left in some of these stocks, right? The hedge funds just say, all right, we're out of it. We're done. We lost $1 billion. We're moving on. Because the hedge funds doubled down. That was the problem in 2021. They like tripled down on their shorts. And that's what made the apes even more excited to screw with them, because they were like, you guys can't triple down and think you're going to get away with it. So if they leave early, I wonder if this thing continues. Celsius back up to $90 as well. Yeah, Celsius, nice dip at 70 for anyone who got Celsius. Same thing with Robinhood when it fell to 16.20. Like, those two dips were pretty decent dips to get into. Wall Street pumps memes so they can pile into the other small caps and call them all a meme run, when a lot of stocks were just at a very cheap valuation. Yes, that's a good point. But some of these stocks, their valuation, like, they probably shouldn't be listed. Like, Faraday Future shouldn't be a public company, right? Some of these stocks don't even deserve it, but a lot of them actually, you could argue maybe they were just cheap. All right, let's see if we got the new tweet. There we go. 17 seconds, right on time. Roaring Kitty, new tweet. Here we go. Here we go. You guys see this, right? Yeah, here we go.
I need your help. I can't tell you what it is. You can never ask me about it later, and we're gonna hurt some people.
Whose car are we gonna take?
All right, I'm gonna mute the audio because YouTube's gonna get annoying with the copyright. But okay, so this is from Mad Max Fury Road. I've never seen this movie, but apparently that's where it's from. Again, another movie clip that he's posting. Never seen this movie, but it is a movie. It looks like he's leading a revolution, right? That's what it looks like. They're leading a revolution. Has anyone seen this movie in the chat? Okay, so there you go. That was the clip. He said, I'm gonna need your help. We're gonna hurt some people. Song Du Hast, movie Mad Max Fury Road. And they're going for the glory. They're going to take over. This story is not ending any time soon. John says you don't need to tell us you haven't seen the movie. Okay, fine. And we're going to see how this plays out. I'll see you guys 3:45 p.m. Got a lot to discuss. We'll see what happens from there. And we'll keep this going. This is insane. And I'll be here, dude. I'll do a 3-hour live stream every single day. This is fun for me. Like, I love being here every single day. As long as there's stuff to cover, I'll be here. I have no problem being here covering this stuff. I have a couple things I have to finish right now, but 3 hours well worth it, hopefully covering some interesting stuff. And we'll see at 3:45 how this thing plays out. In fact, I actually was going to interview someone on the market close today, and we're probably going to extend that interview to another day because there's so much madness happening on the market close. Maybe that interview should be a couple days later from now. So got some more exciting interviews coming up. It'll be fun stuff. Thank you, everybody, for being here. 3:45. I'll see you then, and we'll see where the market goes. Thank you, everybody. I'll see you in a few hours. Bye-bye.